lots of money. Oh, but that's okay. I am with you. Oh, man. Your boy Kevin just lost lots of money. Oh, but that's okay. I am with you. Here we go. Come on. Push it. Find the dip. Here we go. Come on. Push it. Find the dip. Here we go. Come on. Push it. Find the dip. Here we go. Come on. Push it. Oh, my God. What's happening?
First of all of this whining by Wall Street is making me sick. 140% of GameStop was short. Short. You can't allow Wall Street to short 75% of its stock, crush these companies into the dirt, thousands of stocks into the dirt. Then when the individual makes money, everyone's entrepreneurs. I have a kid who bought a house, paid $50,000 and bought a house. After decades of the shorts, you have to accept the fact that individual investors are playing the same game that you're playing, and now you're losing.
Here we go, come on, push it, find the dip. Here we go, come on, push it, find the dip. Here we go, come on, push it, find the dip. Here we go, come on, push it. Oh my God, what's happening? Here we go, come on, push it, find the dip. Here we go, come on, push it, find the dip. Here we go, come on, push it, find the dip. Here we go, come on, push it. Oh my God, what's happening?
There's a lot of power in organizations online. Too many people can get together in a subreddit. Think it's really funny that the GameStop stock is going up and just affects the market in that way. There's 20,000 people live in a Discord who are spamming rocket emojis, yelling, "Go to the moon."
Crap! Tesla stock's down! Welcome back, everyone, to another Tesla stock day. Entire market selling off going into the close. It's not just Tesla stock. It's probably because, quite frankly, A, everybody thinks Tesla's just going to have bad earnings. But B, Netflix. Every time Netflix comes up, everybody's like, oh, this is the beginning. This is the beginning of the pain. Netflix and Tesla aligning on the same day. Ooh, it could make for a very good day. It could make for a very bad day. And let's just say lately, it haven't been that great. So I don't think there's a lot of optimism going into these earnings, which suggests there is actually indeed a lot of pessimism. Tesla expected to report 5 minutes after the bell. Bell rings in about 8 minutes. Netflix expected to report right at 4. We have additional reports coming from Steel Dynamics. Some people have rumored that maybe they're going to be the Cybertruck steel delivery individuals, but yeah, who knows? You've got Chinese steel prices falling. You've got iron ore prices falling. Who knows? Las Vegas Sands reports as well, 405, but we'll be probably deep in those Tesla numbers there. So big, numbers to write down. So let's prepare for those. The numbers we want to write down. As why not celebrate by looking at NVIDIA down yet another 4%, down to 420, just under 420 here. And look at this pain going into the close here. Tesla's almost down 5%. Shift Technologies was up like 127% this morning. Company, I used to be a stockholder here back in 2021, but sold during the used car shortage because I thought, hey, if you have low volumes, how are you going to make money? The same actually ended up being true, by the way, for things like Rocket Mortgage or, Redfin or Zillow. Is when the volumes get constrained, you're going to get crushed. Some of that might end up carrying over to Tesla as well. Some of the volume pain, we'll see. But look at that. I mean, there was talk about after those retail sales numbers is maybe Etsy at a bottom, right? Look at that. Etsy coming off the curve at the bottom right here, 61 on the bottom. We're talking COVID levels right here on Etsy. We got the Qs, folks. The Qs down 1.5%. Why are the Qs down this much? Well, this morning we saw inflation expectations pick up. There was a lot of fear, uncertainty, and doubt. I personally think there is a chance this period of time here, these next, maybe 2 months or whatever, could represent some of the most fear, uncertainty, and doubt we've had in a very long time. Because think about it. You have a combination of inflation, inverted yields, low earnings, combined with uncertainty of how long is higher for longer, combined with the actual 10-year skyrocketing. It's not like you can have an inverted yield curve where you have essentially the 2 and 10 declining, but they stay inverted. But they could be declining, right? Yields could be declining. But so when I say rates and the 10-year, it's actually a whole separate issue, because now you have what's called a bear steepening, where the 10-year is actually rising so rapidly. It's at 4.9%. There's a fear that something's going to break. But honestly, people have been saying that something's going to break for, a year and a half. And I have to say, in January, I mean, I shorted ARK back in December of 21. I wish I held that short much longer. Everybody knows I flip-flopped in Jan 22, like we're about to go through hell. But I have to say, there hasn't been that much actual damage. Like the stock market has hit a poop show, right? But think about actual damage to the economy. What damage? What? We're talking about people's excess savings going down? Or like the real estate market, yeah, it's been volatile. Like it went down as much as 20% in some cities last year, and then it started recovering. Now it's going down again. Is it seasonal? Is it going back to pre-COVID norms? We've got the HouseHack real estate startup. People still investing in that, which is fantastic. I think honestly, they're trying to diversify away from this stock insanity. But if you actually look at the economy, like what's been super bad about the economy? People are like, oh, but Kevin, the banking crisis. Yeah, and guess what the Fed did? They printed our way right out of that. I mean, clearly I'm running out of energy here to talk about this list, so I'm going to have this monster, but damn. Really, stuff hasn't broken yet. Again, the banking crisis, we printed our way out of that. Jay Powell's like, yo, I got you. We'll just guarantee everything to 100%. It's a quick story of what ended up happening. It's insane. So what you're left with is this fear, uncertainty, and doubt that is legitimate. I'm not here to say the bears are wrong to suggest that there's not a reason to be fearful. Election, inverted yields, high rates. Could inflation stay long? Could the Fed overdo it? Are we going to hit deflation? These are all reasonable fears, but holy moly smokers. You've got the inverted yield curve at negative 31 basis points right now. Probably the bigger poopsie doopsie is the 5-year break even. 5-year break even for the next 5 years just shot to a new high. We have not seen a 5-year break even this high since April of 2023, around banking crisis time. That's not great. And then if we go to the 5-year forward break even, that one's even worse. Not, I guess recently it's only back to about an August high, but it's higher. You're at like 2.5%. So I think people and markets are convinced that rates are going to stay higher for potentially years longer, and everything's just going to bleed out for many years to come. Maybe it's a lot of pessimism, but I also think that people who are Tesla investors at this point are like, look, we know things are a little poopsie doopsie right now. Are we really going to, panic and U-turn at this point? Like if you didn't panic and U-turn in December of 2022, why would you panic and U-turn now? It's like you're way up from over there. The Tesla went down to 105. Here are the cues for you. We're still respecting the lines, although we did just break the 100-day moving average. Not great. When we close today, we will yesterday we closed on the 100-day moving average. Today, we're going to close under the 100-day moving average. Okay, what does that mean? That means next stop, 357. That's going to be another 2% possibly down after these earnings based on the technicals. Not great. Next stop after that, we have a little shelf at like 355, another 75 basis points down. And then after that, we're down another 2%. We're sitting back at 348. Now, it's a far cry from where we sat previously. I mean, look at this. This is a joke. These are the cues. This isn't even a stock. The cues are doing great. But yes, over the last few weeks, since about July 19th, the market's been turning. So now we got to get to Tesla and Netflix earnings. The Tesla earnings are coming out at 5 minutes after the bell. We do have the bell coming up here, and so we'll listen to the bell. Usually right along the announcement of the bell, Netflix is generally pretty quick. So I'm going to pull up the Netflix estimates. Remember to check out househack.com, read the offering circular. This can't be a solicitation, but do check out that offering circular and learn about my real estate startup. Deadline for that is November 1st. Here we go.
And we're going to see shortly, because as we wind down here, we're going to close with the Dow off by more than 300. So it's been that kind of day across the board, but it's all going to get real in overtime with Morgan and John. I'll send it over to them right now.
Some buying into the close, but nowhere near enough to make up for the ground lost. That is the scorecard on Wall Street, but winners stay late. 11 to closing about overtime. I'm John Fort with Morgan Brett.
Netflix is out. Netflix sees Q4 EPS down 2 cents. They had a 217 estimate, comes in at 215. Netflix is boosting prices in some markets, US, UK, France. Streaming, they came in at, wow, big beat on streaming paid nets change. 8.76 million. Let's go. That's good. The expectation was 6.2. They got 8.76. The password changing might actually be working. Wow. Operating margin seen at 20%. The estimate was 19.8%. Netflix sees fiscal year free cash flow at 6.5. The estimate was 5.27. This is a great beat. Let's freaking go. APAC streaming net change comes in at a beat. 1.88 versus 141. That's great. UCAN comes in. I don't even know what that is. Whatever UCAN is comes in at 1.75. Is that United States and Canada? I don't know. 1.75 versus 1.22. Memberships come in at 247.15 versus 244.4 mil paid memberships. The EPS forecast for Q4 did miss by 2 cents, but these numbers are a big beat. Their Q3 revenue didn't beat by much though, so I wonder if you're adding lower priced individuals. This number of streaming beat though, massive here. Yeah, you can see on screen here, the stock's up like 6 to 7% here. Rose as much as 8% right when the earnings came out. Q3 streaming paid net change 8.76 versus that 6.2. That's a big beat. That's a sign of the economy, folks. That's actually good. Let's keep listening here.
Subscriber numbers, because they are a big beat. The company announcing net subscriber.
Oh, Tesla comes in. Adjusted EPS misses. Great. Okay, Q3 revenue comes in at 23.4 billion. The estimate was 24.6. Adjusted EPS comes in at 66 cents. The estimate was 74. Gross margin comes in a 17.9%. A miss. We were expecting 18% on Tesla. This was my expectation. I said it yesterday. I said it this morning. I think we're going to miss on margin. Honestly, it actually beats my expectation. That's actually way better than I thought. I thought we were going to be like low 17%. The fact that this is 17.9%, I'm actually like, this is freaking great. That's way better than I thought. I was prepared for minus 10%, man. I'm just like, whatever, man. But like, bring it on at this point. 17.9% in this environment. Hats off to Tesla. Okay, free cash flow. Wow, okay, 848 million. Wall Street's like stupid. They thought the estimate would be 2.59 billion. I'm like, bro, if it ain't negative, I'm happy. Okay, comes in at 848. Let's go. Absolutely, let's go. In this environment, hell freaking yeah. Good job, Tesla. Positive free cash flow. Absolutely fantastic. Shareholder deck is not out yet. Waiting for that shareholder deck to get released right now. So we're just sort of waiting for it to populate on the website. But we've got 53 cents of EPS. Again, the adjusted EPS comes in at 66 cents. The estimate was for 74 cents, so we missed. Free cash flow did technically miss at 848 versus the estimate of 259. Again, I think that's actually fantastic. These are like from the Kevin estimates, these are freaking fantastic. Cybertruck deliveries on track for later this year. Personally, okay, people get pissed when I say this, but I think Tesla's only going to deliver one. Well, actually, I think it's going to be like somewhere around like maybe 30, a couple dozen, a few dozen, something like that. But there's not going to be this like, you know, thousands of Cybertrucks delivered this year. I don't see it. There's no way. The car's not ready, and they don't want bad news on the road. Get good stuff on the road. We don't need bad news, more bad news for Tesla. Okay, so get your act together and then sell them. Continuing to make progress on the next generation platform, focusing on investing in R&D, CapEx with cash flow, fine, whatever. Honestly, the Tesla relations page here is still not showing. There's another way I can get this. I'll get the slide holder deck in just a moment. But actually, I have it right here. So let me save this and port it over to this. I'm surprised their website doesn't have it yet, but that's fine. Tesla sees more AI training expenses. Okay, that's like an NVIDIA pitch right there, right? Because you're going to get more sales for NVIDIA, more than double the size of its AI training compute. Tesla sees the Model Y output in Texas growing very gradually. Okay, is that because they're switching to the Cybertruck or what? Yeah, and so I also don't know if the shareholder deck just is not loading or what, but we'll get to the bottom of it. I'm just reading the tape on it right now. Plaid names first CFO. Okay, who cares? Okay, that's not the Tesla Plaid. That's Plaid, the other company. Stupid tape here. Okay, Tesla implemented upgrades in Q3 to enable unit cost reduction. Robot is currently being trained via AI for simple tasks. Great, still no shareholder day. Focused on investing in R&D, CapEx with positive cash flow. Continue to make progress on next generation platform. They're now estimating 1.8 million vehicles for the year versus 1.82. Slightly short of expectations. Here we go. Update letter now coming. There we go. Okay, now I got my hands on the deck. I don't know how they got their hands on the deck so fast. Fancy people here. I mean, we already got the juice. Tesla. But let's actually go through it. Tesla deck. Stand by 20 seconds while I pull that up. Remember, my real estate startup fundraise for 2023 ends November 1st. It's HouseHack. Go to househack.com. Diversify from stocks. A lot of people are saying that's exactly what they're doing. And people are very excited to be part of what we're doing at HouseHack. We're very excited as well. It's going to be a huge opportunity this winter, in our opinion. Okay, going back to some of the more than double the size of the AI training compute. We saw that jump while Tesla deck is corrupted. What is going on with the Tesla decks today? We'll get to the bottom of it. But it's okay. We're going through some of the updates here. Let me see here. I'm going to start reading this off while I try to load it over. Oh, boy. Okay. There we go. Now I got it on the iPad. Their website took 6 minutes. Come on, bro. We ain't got 6 minutes to have this stuff show up on your website. What is this nonsense? It's all right. Got it. Ugh. All right, here we go. Okay, Q3 update. Here we go. 7.6% operating margin. That's the net margin for the entire company. It's less than that 10% you're really aiming for. Really good compression here, which, I mean, it's not good, but it is compression, right? There's that free cash flow number. Again, I was honestly expecting anything above negative is a good thing with how, like, costs lag. It takes a while to get actually costs to come down. But prices lead in this case. So you're lowering prices before the costs come down. This is not a bad report. I'm looking at this and going, thank God. If they came in at like 15% margin, I would have vomited. And I thought it was possible. $3 billion increase to our cash and cash investments. And remember, they're taking a lot of their money and they're throwing it into equipment. I bet you're going to see a massive boost in the AI equipment expense. Let's go to the statement of operations. No, I want cash flows, baby. Here we go. Cash flows. Net income. Look at that. $1.8 billion. So the net income certainly down. It's not great. We want growth in that number. We need growth. I like it when pricing power grows. We need bigger peepee, damn it. Okay, here, look at that. Look at that CapEx right there. 2.4 million in billion, in CapEx. That is the largest amount of capital expenditures. This is a company that is investing for the future. If you're here for the short term, it's like Elon said, the next year, buckle up. You know, take the panties off and put some pants on and get ready here because it's going to be a tough year. But you know what? They're investing. This is good. And they're still maintaining those margins. Not bad. Okay, so what else do we have here? We've got, I want to see the energy. And I know I'm bouncing a little bit, but energy sales would be so nice to see. Because can we get Enphase to get it up, please? Holy smokers. What is this? Automotive services, energy generation and storage. What do we got here? Q3, stable with Q1, Q2. I would have liked to see a little bit of a pop there. Year over year up 40%. Not great. Automotive revenues, year over year 5%. Not great. We're down from Q3, from Q2. Not great right here. Those automotive revenues dropping. This is how we're really going through an earnings recession. That's what this is. But remember, Tesla stock's basically been flat for 2.5 years. You know, you go back and look at Tesla 32 months ago. This stock is flat, folks. It's done nothing for like over 2.5 years. And that's okay. And that's split adjusted. That's okay. This is a company that's plowing money into R&D. So, and I mean, think about what's ahead. FSD, Cybertruck. Look at what we've got with the Optimus. The Optimus is like a freebie. You realize, like 3 years ago, nobody was talking about the Optimus. The stock is basically at the same damn price now, yet we have Optimus coming. Like, it's like, here, we got a whole nother company for you inside of this company. It's amazing. It's like, how could you get mad at these numbers? These numbers are fantastic. 4 gigawatts of energy storage deployed, more than double the AI training compute, whatever. Main objectives remain unchanged, reducing cost per vehicle. That's what I'm saying. This lags, folks. Cost per vehicle coming down, lag. Prices coming down, fast, immediate. Think about like a real estate flipper. When they get rug pulled on sale prices, they get screwed right away. But their costs were still what they were, and it takes a while for costs to come down, especially since, some of these commodities and such will be contracted anyway. Our costs per goods sold, let's see, cost of goods sold per vehicle decreased to 37.5. That's good. We're trending in the down direction, but prices are dropping at a faster rate. To be clear about that, that's why margin goes down, okay? While production costs at our new factories remained higher than our established factories, we have implemented necessary upgrades in Q3 to enable further cost reductions. That's right. Don't forget, we had a Q3 shutdown. That hurts numbers. It hurts margin. So now we're trying to get Austin and Berlin to be as efficient as China. I don't know if we ever will be as efficient as China. Shanghai is okay. They make money. The Chinese, they make money. Chinese GDP actually came in higher this morning than expected. Actually, last night, higher than expected, which is great. I don't believe the Chinese numbers, but anyway. During a high interest, remember, by the way, to set your calendar for 9 a.m. tomorrow, California time. J-Powell will be talking, and that's going to be a big deal because rates affect Tesla. This is a rate-sensitive business. You have the privilege of acquiring Tesla shares at these prices, in my opinion, and I want to be clear about this. This is my opinion. I have a bullish position in Tesla. I need to disclaim this. I'm gonna get in trouble, man. I have a bullish position in Tesla. This video is not personalized financial advice for you, nor is it tax legal advice, nor is this video meant to be reasonably sufficient information for the purposes of evaluating a security or investment decision. Anyway, we have more than doubled the size of our AI training compute to accommodate for growing data set, as well as training our Optimus robot. Oh, wait a second. They're buying the NVIDIA chips for the robots too. I mean, it makes sense, but I didn't even put the dots together. I knew they were buying a crap load of these chips for FSD, and I was giving a story this morning on FSD to my course members. Let's just say it's good. It's getting a lot better. The edge cases have really gone down. I'm edging a lot less now. I'm just completing. It's great. So this is really good. Lastly, with a combined gross profit generation, whatever, our business energy. Okay, I don't care. Let me get to some of these numbers here. So, so juicy. Give it to me. Free cash flow. This is so good, man. Oh, that 840. Oh, it's so delicious. It's so much better. Like, I was worried we were going to be lower than that 441 with those production shutdowns. I was really worried about that. Yeah, okay. Oh, man. Woohoo. Oh, we can drink tonight, baby. Unless you're Mormon, then it's Diet Coke for you. All right, so what is this? Then we got EPS attributable shareholders. Okay, whatever. All right, here we go. Revenue, growth in vehicle deliveries, growth in other parts of the business. Really? Like what? Energy, a little bit, not really. I mean, a tiny little bit in energy and storage, maybe servicings. We'll see that more in just a moment. Negative impact of $400 million because of FX. Lower average selling prices. Yes, we already know that. Pricing and mix. Why would you buy a Plaid? I'm one of the guys that's like, I have the Model X and I have the Model S Plaid, and I'm like, don't buy them. The Model Y is the best damn Tesla you could buy. And don't get me wrong, the Model 3 is a great car too. But if you just want the best, like the average best out of all of them, it's the Model Y, hands down. It is a fantastic car. The right balance of size, 6 seats, range, and it doesn't have that insane sticker of the X or the S. And you'll get used to the speed. The little people complaining on Twitter about like, oh, but the base model isn't faster than a Toyota Prius. Man, like, then go sell Tesla. I'll buy your shares, dumbass. All right. So growth in vehicle deliveries. Okay. Lower cost per vehicle. IRA credit benefit. That's great. Oops. I want to highlight that right here. Yeah. I want to hear more about these IRA credits. They're going to start applying these up at the front end as well, which will make the vehicles a lot cheaper. I want to see how that works for Tesla since they don't have the dealership model. But if you can apply that off the price day one for the car, it's going to make the car more accessible. That's actually a big plus right here for Tesla. So I'm a big fan of this. Growth in vehicle deliveries, despite margin headwind from underutilization. Look at that explanation. They're like, don't worry about our PP. We're still coming, okay? Our pricing power is coming, boys and girls. Despite the margin headwind going down to 17.9%, it's because of underutilization of the new factories. That's honestly probably entirely true. Like, I think it takes a long-ass time to ramp up these factories. I don't blame this at all. I do blame corporate Tesla. I don't know if this is like a phishing email or if it's legit, but it has an @tesla.com email. I am pissed at them continuing to send me emails saying that I'm using Google Ads to pitch my Tesla referral link. And I'm like, what are you smoking? Like, show me one link. And they're like, we just see data going to you from a link. And like, where are the links? Show me the links, because I don't do that. I don't even run ads. What is this? It's crazy. Anyway, so I don't know. Maybe it's some mix-up, or maybe they don't like me. Maybe Elon doesn't like me. I don't care. I still love the people at Elon. Can hate my guts and not advertise. I know they don't like advertising, but the people at Tesla are great, and that's what I'm investing in, is the employees of Tesla and this company. Gross profit, growth in energy and storage, as well as other service, growth in regulatory credit sales, fine. Quarter-end cash increased sequentially to $26.1 billion. Okay, all right. I have a pet peeve with these numbers all the time. Let's go to the balance sheet. People get so mad at me. The people who are like, Elon can do no wrong, they get so mad at me when I do this. I don't care. Here's what we're going to do. We're going to go $26 billion of cash. Okay, the other things contribute to cash flow. So I'm not going to look at those. What I'm now going to do is I'm going to look at bills. What are the bills to pay over at Tesla? Yes, I got to know how much you got coming out the door. Like, you could be rich, but if you could have $1 million of cash on your desk, but if you got $1 million of bills on your desk, are you really a millionaire? No. 13,937 plus, those are accounts payables. Accrued liabilities, I'll do within the next year here, 7,636. Then we have our deferred revs. I don't subtract that off. It's the way I do it. You don't like it, do the math yourself. Current portion of debt, that's I'll take that off too. 1967 equals 23.5 so far. And then we have total current liabilities 26, but I'm not doing the deferreds. We have long-term in here of $3 billion. So what we have in the Kevin math of free cash flow is about $2.5 billion of free cash flow, or free cash, I should say, plus probably about $1 billion of free cash flow per quarter, right? Per quarter. So this is actually very good. Like, the company's cash position, this is actually getting better every quarter. I don't want to hear this crap. Oh, they have $26 billion of cash. Bro, they also have $23.5 billion of bills, okay? So suck it. They have $2.5 billion of cash, free cash that's not tied up, and they're making about $1 billion a quarter. This is actually very good. This is very impressive. I actually do like this. We do have the $3 billion of long-term debt, but they could basically pay off their long-term debt with the excess cash they have, which is probably financed at lower rates, so why do that? And then they could just use their free cash flow to operate. So this is not bad. This is actually a very good balance sheet. It's gotten better, so that's good. All right, now let's go look at the stuff that they basically give you to make you feel good about being an investor and how wonderful everything is. Oh, what the hell? God, no, this is going to suck ass for Enphase. What is this? 49 megawatts delivered as opposed to 66? Like, I don't know if that's either Tesla just being straight morons sometimes with their sales department, sometimes, not all of them, or what. But it looks like the storage deployments are actually back up. That's nice. So we're back up on storage deployments. But I just applied to get, because I have like $1,000 electricity bill in my office. And so I'm like, all right, let's put Tesla Solar on it. And Tesla's like, oh, yeah, we can, we'll do a bid from Google Maps. I'm like, whatever. So they're like, well, we'll give you a 10 kW system. And I'm like, bro, I had a local Enphase contractor come out and they're like, yo, we can arrange your roof to get you up to a 17K dub and sell you like 4 batteries with it. And I'm like, yo, Tesla, look at their map. It's way more efficiently laid out than your map. They actually came here with a drone and analyzed my roof, and you guys just use Google. Like, get your ass out here and fix your bid. And like, what customer does that? And Tesla's like, nah, well, our panels are different. This is just the way we do it. I'm like, you pansies. Anyway, So whatever. I mean, maybe that's why their megawatts deployed is going down. They got to get their act together. That's okay. I could be a bull and I could still be a critic. So what do we have here? Total delivery. Okay, we already know these numbers. 435. That's old news. Supercharging stations. I like this. Oh, look at that growth in the supercharge. Is that over the quarter? Oh, that's really good. Go Team Tesla. Look at that. 5595 divided by 5265. 6.2% in the quarter. Are you freaking kidding me? That's amazing. That's an annualized growth of superchargers of like 24%. That's really, really good. Yeah, we need the gain the lead soundboard. That's really which one is that? I forgot which one it is. Well, let's just figure it out. Is it this one? No, that's the intro sound.
Gain the lead.
The outro. There it is.
Gain the lead.
Yeah, boys and girls. Let's see here. I don't see no Cybertruck tweet unless it's the @Cybertruck account, which is possible since they made one of those. Tesla off-road, who cares? Okay, they put a little triangle, who cares? I see no tweet. Who cares? Whatever. Okay, so this is actually good. This is like 24% annualized growth on the charging network. That is slower though than what they had been doing. They were doing about 31%. So you are slowing down on that supercharger expansion. I'm going to put a note here. I'd like to see faster supercharger expansion. Again, really excited, though, that the Optimus AI investments are being made. This is impacting free cash flow. So I want to hear a lot from the team today about Optimus. I mean, people don't realize this is a company within a company. You're basically getting the whole Optimus company for free, which is very, very, very exciting. Okay, what do we have here? During the quarter, we brought down several production lines for volume upgrades, which led to a sequential decline in production volumes. We made further progress smoothing out the delivery rate. That's fine. September accounted for 40% of Q3 deliveries. Okay, well, Q3 was July, August, September. Wow. Wait a second. That's really interesting because if you guys delivered 430,000 cars, 430 times 0.4, that means you delivered about 170K delivered approx in September. Okay, watch this. You ready for this? 170 times a full 3 months of being up. This is like 516K produced or deliver, however you want to put it, right? Like they're close enough. That's very interesting. That piece of data they gave you there, that's a little hint. I like this. That's a good little hint. Very good. Very good. Okay. Very nice. Okay. Oh, here it is. It's on the Cybertruck thingy. Okay. Tesla beginning deliveries November 2023. Okay. Well, that's next month. That was my expectation that they would begin deliveries of the Cybertruck in November. We'll see where that is. Let's see here. Giga Texas, we began pilot production of the Cybertruck. We remains on track for initial deliveries this year. Yeah, it's gonna be few. Whatever. We're expecting Model Y production rate in Texas to grow very gradually as we ramp additional supply. That's because they're trying to do the 4680s over there. So you're hitting some snags. That's fine. That's normal. It's normal. I could still love the gals and dudes at Tesla for the hard work they do. Shanghai, other than scheduled downtime in Q3, Shanghai has been successfully running at near full capacity for several quarters. Don't expect a meaningful increase in the weekly production rate. That's fine. It's their main export hub. Totally fine. Berlin-Brandenburg, Model Y remained the best-selling vehicle of any kind in Europe. Smart. So damn Europeans. They're like, I ain't paying for the S or the X. I'm going to get the Y. That's kind of European. But anyway, AI, software that safely performs real-world tasks is key to our AI development efforts. We have commissioned one of the world's largest supercomputers to accelerate the pace of AI development. Yes, that may be true, but you're also using a crap load of NVIDIA chips. So quite frankly, to me, bullish on NVIDIA. Like if I could have like this dream portfolio of what I think is just going to rip, no guarantees. Where is it? No guarantees. Okay. I have bullish positions in this stuff. This information is not and shall never be deemed reasonably sufficient information for the purpose of evaluating security or investment decision. I'm a licensed financial advisor, becoming a licensed stockbroker, and I'm a licensed real estate broker. This is not tax, legal, or otherwise personalized advice. Okay. So with that out of the way, I'm really like invested on the idea of like this dream portfolio where you just have like Enphase, Tesla, and NVIDIA. And when you get into a low rate environment and everybody's financing the crap out of these chips, oh my gosh, game changer, game changer. And it's just my take. I know people are like, oh yeah, but weights might not come down. They're going to come down. We're going to go straight to deflation. Nobody knows deflation like we're about to know deflation. All Tesla, hashtag not guaranteed. All Tesla rentals through Hertz in the US and Canada now allow Tesla app access. Oh, that's actually kind of cool. That might actually encourage other companies to start buying Teslas. That's very cool. I like that. That's smart. This is a great pilot that Hertz is doing. I'm very happy about this. Very, very, very good. Then we've got battery powertrain manufacturing. Despite macro headwinds, start planned shutdowns or via planned shutdowns in Q3. Average vehicle cost was $37,500. We continue to work to reduce that cost further for very heavy vehicles. High voltage powertrain architecture brings noticeable cost savings. Oh, wow. Look at that. The Cybertruck's going to bring an 800-volt architecture. Ooh, talk dirty to me. That's awesome. It's kind of what Lucid was doing. And they may have borrowed that one from Lucid. Oh, I don't think you're allowed to say that as a Tesla bull, but whatever. Energy storage deployments increased 90% year over year. Yeah, well, you didn't do too much in the last quarters, though. Okay. 40 gigawatts, phase 2 expansion. Production rates improving, fine. Solar sequentially declined, sustained high interest rates, and the end of net energy metering in California have created downward pressure on solar demand. Yep, that's true. As our global fleet size grows, service and other business continue to grow successfully. Supercharging, insurance, body part, shops, whatever. Supercharging, profitable business for the company. Ooh, I want to hear about this. I want to see the numbers on the profit for pay-per-use, supercharging. I want to see the margins on this deliciousness. All right, what do we have here? We're planning to grow production as quickly as possible in alignment with the 50% CAGR goal, whatever. We have ample liquidity. I agree. We continue to execute on innovations. I agree. Cybertruck deliveries remain on track for later this year. Okay. I don't know where that whole November thing came from, but that's what some people are saying. Whatever. Oh, here's a map of how cheap the Model Y costs in different areas. $36,000 in other states, but in like Colorado, it goes down to $31,000. $31,000. It's not the Cybertruck, the Model Y. Sorry, $31,000 for a Model Y. Why are they not advertising this? Like, wake up, Tesla, please. Like, I'm just gonna stop saying it. Whatever. Oh, there it is. Tesla Cybertruck deliveries begin in November 2023. Dude, they're just driving these things around on the back of trucks right now as like clickbait, basically. Then, I mean, maybe they're moving them to different areas to test them in different areas and stuff, but. This is going to be like a Black Friday gift from Tesla. Hey, boys and girls, we delivered our first Cybertrucks. It actually will be very cool, though. Don't get me wrong, like, I'm very excited about it. I'm just not holding my breath. I'd be dead a long time ago. 1 millionth Model Y produced. Oh, congratulations, Giga Shanghai. That's good. What is this? What is this like gang sign we're making over here? Is that supposed to be the T for Tesla? Oh my gosh. Okay, that's a new one. I will say I want these hats. These hats are actually kind of dope. The black one's generic, but the orange and the light blue one, those are actually kind of nice. They should sell those. Those are good. I get it, because your arm is actually kind of curved like the top of the Tesla. Okay. I'm not sure if that's cool or cringe, but I do like the hats. All right. Some graphs, whatever. We already read the numbers. Who cares? Big deal. Financial statements. See, I mean, this is more what I care about. Let's see what we have over here. So what about the reg credits? Oh, how did you guys get all these reg credits? My God. Oh, lordy. Those are lots of reg credits. You doubled reg credits from last quarter. I mean, you're more in line with what you had in Q1, but the problem is your revenue is lower than what you had in Q1. And again, I know we had like some shutdowns over here, but it's the amount of price cuts. That's a problem. That's not great. So a little bit of a prop up over there on the credit side. I mean, it's fine. Take the money. It's free money. And I'm not going to say don't take the money. But, yeah, man, we got to get these numbers up. Or at least the costs down, which that'll come. That'll come. Just wait. Wait for that deflation to set in, whenever that might be. All right, so what else do we have here? Leasing. 489 is pretty low. Total automotive revenues 19.6. Energy and storage barely moved. It's because solar was down. Leasing, still a fraction of people or the money that's being made is from leasing. Energy storage was actually down sequentially. Wait, hold on. Are these costs? Sorry, my bad. Let me double check what I'm looking at here. Oh, yeah. These are cost of revs. Oh, that's interesting. Wait a second here. Wait. Am I reading this right? I think I am. Energy storage and generation grew, what do we calculate, like 4% or something like that? I mean, we're divide the new number divided by the old number. We're at 3.3% increase in energy and storage, but our costs declined by 4.5%. Wow, 3.5% increase in energy storage rev, but costs down 3.5%. Oh, it's like the same. Wait, no, sorry. That's actually 4.5%. Yeah. Okay, I can jive with that. I like that. This is not bad. Let's get some more of that monster in me. Oh, yeah. Because I got to get ready for that earnings call. That's what I'm hyping up for, is that earnings call, coming up. Maybe the monster will kick in by then, because usually I go to sleep. They're so exhausting to get through these earnings calls. But whatever, man. So services and other, they actually had to boost the services costs, and services and other, yeah, but barely moved up in costs, barely moved up in revs on this. But you're positive, right? You actually have margin now. Here, I'll highlight this in orange so it's a little easier for you to see. But you're actually making profit on service. My dad just got my Black X back from the shop, and they initially quoted like $1,200 to fix the Falcon wing doors, and it was only like $300. I'm like, man, they can make a profit off that. They're making like 6% profit. They made a whole $18 out of that. I know this is an average, obviously, but that's not bad. 6% profit margin on the service. That used to be negative. That was like your loss leader back in the day. Oh, R&D. And a little bit of an R&D pop over here next to the restructuring. What was that? The investments in chips? Is that where you're throwing that, or what? It's the curious. We can find out. Oh, no, sorry. That's SG&A. The restructuring is 0. Okay. So your SG&A popped a bit. Let's do 1161 divided by 943. 23% pop in R&D. See, I like that. That's actually not bad. 23% drop, and then only a 5% jump over here in G&A. And let's go right here. Yeah, did I do that right? 11 divided by 943 is, yeah, 23%. I thought I messed that up. There we go. Solved. All right, good. Now, what else? Well, I don't know. Is it time for a course pitch? It's linked down below. Who cares? All right, whatever. So net income. Yeah, price is going to go up. That's true. It does go straight out. All the new versus pro courses are actually pretty good. Okay, net income. Yeah, this is just a disaster. Unfortunately, a disaster. The net income line is just terrible. But you know what? They should just replace the net income line with the inverse of interest rates. So it's basically low interest rates, high net income. High interest rates, low net income. It's like a formula. And like if you're buying Tesla stock, expecting it to like moonshot after with these high rates, I don't know, man. I think you probably want to buckle up for a little more patience. But I look at it and I'm like, whatever, man. I'm just gonna. I know this PP is gonna be the PP is gonna be massive at Tesla, massive PP, so thick and juicy. I mean, the largest PP ever. Nobody's gonna have better pricing power than Tesla when as rates start trending down and people stop being so fearful. But there are legitimate fears in the world, absolutely legitimate. Israel stuff is terrible. And Palestine. It's just all bad. Okay, so we already went through the cash flow statement. We already went through this. We went through the balance sheet. People get mad at me when I do that, but I don't care. Then what do we have over here? Purchases of solar energy systems. It's fine. Okay, fine. What do we have over here? Debt, net repayments, or borrowing. Oh. Under vehicle and energy product financing. What happened here? What's this $2 billion? Net borrowings. under vehicle and energy product financing. That's the first time that's been so positive. Remember how I said they're going to need to prop up the cash a little bit? They just did. Net borrowings. So y'all just borrowed $2.2 billion. Do you want to say anything about it? Huh? Jordan? Borrowings. Okay, fine. Whatever. That's a good joke. Somebody says I'm going to lose the bet. I have a bet that Tesla's going to deliver less than 500 Cybertrucks. I don't know, man. I don't believe it. What? Like, okay, so what? They're going to start delivering in November. I don't see it. Here we go. Delivery event November 30th. The delivery poster is out. Ooh, that's sexy. I don't think they want me there. I think that's why they're mad. It's like, fine, I won't go. They could just be blunt, be like, you're not invited, sir. Like, fine. But what is it? They sent me an email about me using ads to pitch my referral link, which is not true. I've never done that. Never have. Never will. And I think they're trying to use that as a way to renege on me coming to the Cybertruck delivery event. Now they haven't said that yet, but I wouldn't be surprised. Watch. Elon don't like Kevin, I guess. Whatever. I think it's still invest in the stock, even if you don't want me. All right. What else? So what else? So reconciliation. Okay. Footnotes. Tesla. Okay, cool. So now we're going to set up for the earnings call. But what I want to do is I want to see what Wall Street is saying. So right now what we've got is Tesla's actually popping a little bit in after hours. And yeah, the Cybertruck announcement was made for November 30th. Here it is. They're salty about you being objective. I mean, look, thanks, man. I appreciate you saying it. I try my best. I'm just going to give my opinions. And then, like, it's a free opinion. Like, you didn't even pay anything for it. It's like, if you don't like it, then tell me to F off. If you like it, then take it, okay? But at least I'm going to say it. I'm not going to, get on my knees every day for you. So I don't do that for anyone. Earnings call. Yeah, earnings call is coming up. Exactly. We're going to prep for that earnings call soon. Then we're going to, let's see here. Test. I want to see what Wall Street is saying on these Tesla numbers. So let's find out. I wonder if there's a suit on this. I'll find out. Yes, there is. Suits. Okay, here we go. You ready to see what the suits are saying? Me too. Oh yeah, baby. View, Tesla's operating margin sunk to 7.6%, the lowest since the first quarter of 21. Big deal. Autos reporter Sean Kane. This is all coming after Kirkhorn said in January that operating margin was the right metric for us to be focused on. And then he quit. Stepping back here, there's been a lot of focus on Tesla's dominance in the U.S. market, and rightfully so, but it's also important to talk about the bigger picture. And there is perhaps no bigger story out there than the rise of BYD in the EV space. Of course, Tesla makes only fully electric vehicles, so while BYD makes both plug-in hybrids and battery electrics, it is still impressive. No, it's not. Like, they're putting up a chart of, here, I'll show you. Hold on a second. You can't see all my secrets. I don't have secrets. Here. Did you know I'm having twins probably this month? Maybe, well, definitely before the Cybertruck comes out. Anyway, take a look at this. This is the chart they're talking about. And it's like, okay, now show the chart without the plug-in hybrids, because that ain't the future. Selling little cheapies in China and trying to suggest this is a big deal. Who cares? This is garbage. BYD unlikely to outpace Tesla's battery electric vehicle sales on an annual basis. Exactly. Okay, Tesla, BYD far ahead of their competition. Cybertruck production remains on track for later this year, which with deliveries expected for November 30th. Tesla now has 5,495 superchargers, 51,000 connectors. Yeah, we want to see how much. Oh, yeah, how much money are they getting on the credits, by the way? I'm a member finally. Been watching for 3 years. Oh, welcome aboard, Orange. That's amazing. Oh, that's really cool. Did we do IVF? Heck yeah. These are twin girls. Yeah, welcome aboard. Disclose your twins to the SEC. Yeah, we'll put them on the ADV. Okay, Tesla's dominant solar business continues to struggle. Oh my gosh, tell me something new. Like, of course solar's in the toilet. Like, wow. Let's see here. Chart on page 8 shows cumulative miles driven on FSD beta, now above 500 million. The curve isn't quite a hockey stick, but it's steep. Tesla Semi is still in pilot production, meaning we're close to almost a year of it remaining at this stage. True. The installed vehicle capacity on page 7 of the deck is always worth looking at. It puts the Cybertruck in pilot production with a capacity of over 125,000 units. Uh-oh. What's that going to mean for my bet? Let me see here. And that would be TIS page. Oh. Current. Oh, that's annual vehicle capacity. Oh, I'm going to win my bet. Greater than 125,000. Installed capacity does not equal... Wait a minute. They added this disclaimer. I don't think this disclaimer was there in the last ones. This is why I think Elon doesn't like me. Come on, he's reading the fine print. Anyway, installed capacity does not equal current production rate. Duh. That's okay. That's actually not bearish or being full disclosure here. And there may be limitations discovered as to production rates. So in other words, clickbait production. That's okay. You know, everybody's got to have clickbait sometimes. Production rates depend on a variety of factors, including equipment uptime, component supply, downtime, blah, blah, blah. Okay, that's not a big deal. Tesla still in pilot production. Okay, we read that. Cybertruck delivery is expected to be beginning on the 30th. That's fine. Big deal. Whoop-de-doop-de-doo. We'll see if I get invited. If I'm not there, we'll just do a YouTube video. It's fine. It's fine. This should just be up front. You're not invited. Fine. Then give me my credits back. I'll buy more of the sweaters. You know, the sweaters are actually really good. They have little zippies on the side. Oh, I love zippies. All right, what else? Installed vehicle capacity chart. Okay, I read that one already, Kevin. Come on, man. Tesla's energy generation and storage business gets a shout out in the press release, with the unit contributing over 500 million in gross profit for the quarter. Revenue for the division grew 40%. Fine. Global inventory is at 16 days, unchanged from last quarter, but that's still twice as high as the 8 days of inventory from a year ago. Rates, boy. What were rates a year ago? Half. Probably less than half. Not many updates really otherwise on the Cybertruck. Boost in regulatory credits. Oh, if it weren't for the regulatory boost, Tesla's automotive gross margin X credits would have been even lower. Oh yeah, that's true. That is a good point. We'll give it that Wall Street. You're not wrong. They usually show it here somewhere. I'd like to see if I can just quickly find it. Margin, where is it? I'll find it later. It's not that big of a deal. Okay, so gains, fine. Shares of Rivian, Lucid, Workhorse, Nikola, Fisker all higher in post-market. And then you've got key metric everybody's been looking for. Oh, there it is. Automotive gross margin X credits was 16.3%. The expectation was 17.9. With credits, we were looking at 18. It came in at 17.9. I thought it was going to come in at the low 17s, maybe even 16s. And if you take out the credits, it was actually in the 16s. But again, who cares? Space Tuna. Remember my name, Kevin. I will buy my third course if you win the $500 bet. Well, we may as well buy it now, because the course will be cheaper if you buy it now, and I'm going to win the bet. What are you expecting from Powell tomorrow? No, we're going to get Dove Hawk tomorrow. Or we're going to get a Dove Hawk. We're going to get a Dovish Powell tomorrow. I'm convinced we have a Dovish Powell tomorrow. This is too much. It's too much. They can always go hawkish again, because remember, they can always hawk again in 2 weeks, because November 1st is around the corner, and November 1st is the deadline for investing in HouseHack. Non-accredited investors, you can invest $5,000 now, credit card, debit card, directly through your bank account, whatever you want. And anyway, that's the deadline. But they could just hawk again November 1st. I think they're going to go dove here and see what happens. This is the perfect time for them to go dove and then hawk us if they need to in November, or stay dove. This is the time to flip. And if they don't tomorrow, then we'll just have another drink. Okay, seems like AI is going to be a big focus of the call. Shareholder highlights include this graph. We have more than double the size of our AI training compute to accommodate for the growing data set, as well as our Optimus robot project. That's true. I'm actually pretty excited to that. Regulatory credits doubled, reaffirmed 1.8 million vehicles. Fine. Customers, fans, and retail investors want to know when the big handover event in Austin will be. Well, now we know it'll be the 30th. I had the Cybertruck reserved since like day one. Where's my Cybertruck? They're gonna give me mine last. I almost guarantee it. I'm gonna get mine last. It's just gonna be like, you know what? Maybe it'll be like the iPhone, where I'm just gonna be like, that's it. Why I'm not buying the Cybertruck, and then I'll end up buying it anyway. I don't know. Okay, so when's this earnings call? Let's see here. Earnings call should be at 2:30. Let's listen in over here for just a moment.
Nutrition, pediatric nutrition, which speaks to baby formula.
Abbott CEO? No, I don't really care about that. So I do. We should also look at what's going on with what's it called? Netflix in just a moment. So we'll do that, and then we have the earnings call coming up. The Tesla earnings call. Yeah, that is scheduled for 2:30, so that'll be exciting. We'll get to go through the earnings call. Let's see what some of the comments here. Elon's going to make everyone work through Thanksgiving. Yeah, no kidding. Oh, really? There's a tool online you could plug in your reservation number, and we'll show you where your place in line is for the Cybertruck. Really? Well, let's do it. Let's do it live. We'll do it live. Reservation. Okay, where's that tool? Because I'm sure there are a lot of people who would like to see that. But we'll wait to see what y'all say. Okay, Netflix. Yes, we covered Netflix earnings when they first came out. Tesla stock's kind of going red again, but it does that usually before the earnings call. Wow, Netflix is up 12%. That's fantastic. That's really good. We should go through some of their numbers as well, since that's a pretty big deal. Okie dokie then. Oh, interesting. It does give you your time frame. How fascinating. I wonder if you could just log in and find out. We'll find out. Anywho, very good. Let's see here. Okay. I want to see a little bit more of what the suits are saying. So I am going to grab that again. And let's also see, they're still on Abbott Labs over here. Let's see if Bloomberg is talking about them at all. Probably are. Okay, let's see what we get.
And of course, as they debate this issue, or I guess don't debate it, let's remember we're only about 30 days away from the potential for another U.S. government shutdown. A lot of reverberations for the market onto the negative side, but the one positive actually might be we could see a flurry of IPOs as a lot of people try to get in through the door before some of the key government agencies have to shut their doors. Bailey Lipschultz joining us right now to talk a little bit more about that. And Bailey, I am curious here about the process, because we talk about a relatively narrow window, if assuming a government shutdown does happen, where these companies would have to get their filings in. But doesn't that also put pressure on them to actually make good on that filing and come to market?
Yes and no, Romain. Yeah. So when you flip your S1 filing or F1 filing, if you're an ex-US company, that starts a 15-day waiting period before a road show. So 15 days later, you hit the road with your advisors, talk to some investors. That only takes a week. So at that point, if you get into early next week, you're really pushing the envelope for a potential November 17th shutdown. But you can still be on file as long as you want. There's no rush necessarily on the issuer's perspective to get out the door. But the main risk is your numbers are out there. If you end up waiting and have more updates.
Well, that's what I'm curious.
All right, let me see what else we have here from the suits. From there, my favorite part of the Tesla earnings bonanza is jumping on the phone with investors and analysts. Well, yeah, okay. It's clear price cuts had an impact on margins, but that was known and priced into the stock. Equity strategist at Morningstar in a phone interview on Wednesday, the Cybertruck announcement is a welcomed relief for a vehicle that had several delays. It's interesting that the Cybertruck launch is coming just as GM and Ford have recently reduced shifts for the F-150 Lightning and the Silverado. Well, yeah, I mean, they're also getting destroyed by these strikes. GM just announced that it's pushing back the expansion of its pickup truck manufacturing by a year. Wow. Yep, that's a competitive advantage potentially there for Tesla. That's exciting. So let's see what else they mentioned here. Meanwhile, Rivian had a solid year. Their balance sheet has actually been getting better. The Rivian stuff it's not as horrible as it used to be, but their numbers were scary there for a while. So, well, that's great. Okay, Tesla's operating margin sunk to 7.6%, lowest since the first quarter. We saw that stepping back here. There's been a lot of focus on Tesla's dominance in the U.S. market, rightfully so. Yep, we talked about that. That was the BYD commentary. All right, what else? How's our buddy Gary doing? How's Gary doing today? Let's see what Gary says. Tesla talks about the misses, earnings quality not that great. The 554 in red credits way higher than expected. That's true. And yep, conference call confirmed for 2:30. It's about 40 minutes from now. COGS decrease, just no, boring. Okay, so let's open it up to poverty chat, and let's see what questions people have, and let's see what everyone's thought here is. Okay, so let's see. Okay, we're gonna open it up. All right, there we go. We did it. How's Gordon Johnson doing? Oh, that's true. He's probably got some real hate for this one. Let's see. He's going to talk about the red credits for sure. All right, let's see here. So 4 minutes ago. Oh, he's just asking for the phone number to dial in. He wants to ask a question in person. Oh, that's cute. So do I. But, yeah. Poverty chat. Okay, Vegas is booming, says someone. Maybe. I don't know about the real estate market, but people are spending, that's for sure. Is Elon going to bankrupt charging Twitter $1 a year? Twitter uses $1 a year. I mean, I think it's a test, like a pilot program, but yeah, it's not good. The problem is you have this stupid anchor on Tesla stock called Twitter. My bad. I did that. As soon as I started looking at the chat, everything just went kaput. I fixed it. And man, did you just call it poverty chat? Yes. Yes, I called it poverty chat. I will say it again. Thoughts on FSD being used in the aviation industry? That's really interesting. I mean, you have so much autonomy already in aviation. It's just takeoff and land. But yeah, I would say, yeah, probably. You're going to get a lot more of that. I mean, I don't know that it would be FSD, but something AI will definitely make its way into there. Absolutely. I'm buying Rivian, double down. Interesting. We're free, says Far Real. When invest in Rivian? Probably won't. White Monster can taste way better than original. The white, honestly, that's my favorite, but I only had a green one. Tesla Bulls getting wrecked, says Ryan Powell. Are you related to Jerome? How do you feel about Enphase earnings on the 26th? Just like Tesla's. Terrible. How much will interest rates affect HouseHack? And well, I can't tell you what we're going to do in the future, but I can tell you right now, these interest rates are amazing for HouseHack. I think we've got, I mean, this is really good. This is great. This is a great opportunity, in my opinion. That's just my opinion. No guarantees. It's just all how we play it. I think we're playing it well. Let's see. I'm gonna DDS spec you. Yeah, show me your DDS, bro. I got my. You know, I have my DDS right here, bro. Okay, where's yours? Okay, you're gonna start talking in poverty chat about how you have a DDS. Where's yours? I got mine right here. Okay, poison tip, bro. Careful. All right, let's see here. Lucid, the Tesla killer. Oh, that's funny. Matthew says, disrespectful. What, your mom? Being pilot, tested in Philippines, I think. Oh, that's cool. It would be autopilot. Yeah, it would literally be autopilot. That's true. Intro is hilarious. Let's see here. Buy Tesla or not? I mean, it really depends on your own personal situation, right? Like, my thinking is the problem is when interest rates start coming down, it'll probably be too late. I think stocks will be so much higher. The interest rate sensitive stocks will be so much more expensive. So that's a good one, Salt Chan. What do you think about the immigration problems in Europe, more specifically Sweden? I don't know anything about that. I think if you're talking about like migrants, I mean, that's just the world we're living in. There's so many problems in other parts of the world that, you know, you get migrants into California, into Texas, into Germany, you know, Syrians, refugees, you know, all that. Let's see here. Thanks for all the answers. Yeah, sure. Netflix is bringing Disney up. Oh, that's a good call. How's Disney doing after that Netflix beat? Up 1%. All right. Let's see here. Well, you can't be perfect, Francis. Just something good. Who even likes Tesla? Right. Full self-driving taxi pilot. Okay. Would you buy the $25,000 two-seater vehicle teased in the book? I mean, you have to see these cars first. It depends how functional they are. I can't find my Cybertruck reservation number. I don't know what email I put it under. I think there's a chance I put it under my iCloud email because you like Apple Pay when you check out, or they just canned it. I don't know. I mean, I'll turn on the iCloud email and see if I can find it. I'm going to put a little banner up here. Earnings call at 2:30. Earnings call at 2:30. There we go. Okay. But yeah, that's fine. I do see some comments here about HouseHack and that. And a lot of people there are a lot of Tesla investors who are investing in HouseHack. One of the big things they're saying is I need some diversification and the idea of like get in early, you know, or whatever. But you have to be careful. Like I can't make guarantees of that. And you don't want to say things like that because I don't want to imply guarantees or whatever. You be so careful. Okay, there we go. So I will check the iCloud email, but I'm happy to tell you what it is if I find it. What's the email called? Can somebody tell me what the Cybertruck reservation email is called? Like, is it just like Tesla reservation? Tesla reservation number? Yeah. Anyway, I don't know. All right. So anyway. Let's see here. Let's see. Okay, so after Tesla Energy, how's the forecast for Enphase? Bad. Well, I wouldn't be surprised if it's down. Let's see here. Enth. It's actually up 0.37. It just can't go any lower. Kevin, your courses have helped me buy 4 properties and grow my net worth over the course of 4 years, even though we are a single income family. My wife is a stay-at-home mom to take care of our daughter. Thank you. Yeah, that's freaking awesome, dude. Congratulations, man. Like that's really cool. I think it's really valuable to, you know, for parents to really be as involved as they can with their kids. You know, I always wish I could spend even more time, but Lauren does, and you know, if one can do it, that's great. Okay. Now let's see what else we have. Did you buy Cyber Beer? No, try it. If you're a course member, you don't have to be in Poverty Chat. Just ask during the next course member live. Yeah, I got like 3 Tesla accounts. That's the problem. Like I'm trying to log into the different ones that I have because like my email sometimes it has a dot. Sometimes it's so annoying, and I don't really want to figure it out live. But we'll get to the bottom of it. Yeah, that's my primary one. Anyway, I'll figure it out. All right. What's with the thesis on interest rates will come down? Historically, we've been higher. No. They will come down. They will come down bigly. The inflation that we've seen now is from rapid money printing. The expectation in the long term is that innovation and capitalism drives deflation, not inflation. Things deflate. We're in a deflating economy. We just print money because we can, because technically deflation is bad for debtors and that temporarily hurts things. But capitalism and innovation is deflationary. There's nothing around that is what it is. So anybody saying something otherwise, it's just not correct. So all right. Anyway, let's try that. It's just a matter of time. Okay, let's see. What do you think about the global short squeeze? Oh, man, that's interesting. Yeah, shorting and hedging, and then as well as shorting bonds. Yeah, possible. Yeah, possible. Okay, let's see here. Best thing to spend the referral credits on? I think the sweater is actually pretty good. That's the little glasses too. The shot glasses are pretty cool. I don't know about the tours, because then you got to fly yourself out there. I think it's expensive and that takes time. I don't know how worth it that is. And I think the tours are sold out. I would have liked to have gone to the Germany one, but they released the Germany one after the Austin one. So I signed up for the Austin one, and then I didn't sign up for the Germany one. Whatever. Okay. Because of the, let's just see. What is this? Huh. Interesting. Okay. So, Kevin, will this live stream save so we can watch it later? Yes. Amazon will probably be thoughts on Ubiquity. I think Ubiquity is a great company. It's, it's having its inventory, less inventory obsolescence in the last earnings report though, which is good. That should help smooth out some of the pain. But as long as inventory channels are full of these products, it's just gonna take a while. What do you think about the run up in gold? Fear. There's a lot of fear. Lots of fear. Ooh, what's this? $20 donation. Been a fan for years. Made over 250K in your stock picks over the year. I now have a big position in Amazon. How do you think they will do on earnings? I have absolutely no idea. I don't pay that much attention to Amazon. I do like Amazon. They haven't run like some of the other companies, so who knows? Maybe they will. But I think they're a great company. Yeah, I don't know. I mean, they don't make money from their selling of products. They make money off their servers and data. And maybe in the future they'll make money. But I think the delivery timeframes will just keep having to plummet and plummet and plummet, which is expensive. So it's hard to really expect dividends soon. But I think it's a great company. But yeah, I don't know for your personal situation. Thank you though for the donation. The market being irrational. Thank you for that. Tesla thrive by rather not advertising than advertising. By advertising, you're paying the mainstream media. See, but what is this obsession with oh my gosh, the paying the mainstream media? It's okay, but if you got to get in front of some people somehow, you're gonna run a presidential campaign and not run ads because I hate the mainstream media. And it's like just shooting yourself in the foot. It's like, what's it called? You bite off your nose to spite your face. That's not a good idea. But whatever. Okay, what else? What else do we have? Well, we have 27 minutes to the call, which is exciting. So we'll get ready for that. And then I'm looking at some more of what the suits are saying. Big story yesterday while waiting for the call. What is this? Tesla is urging the Biden administration to make it harder for competitors to comply with the federal fuel economy standard as they catch up with the electric car market. Ooh. Somebody here writes, I saw the Cybertruck on Saturday. I was walking in my Oakland neighborhood to a Trader Joe's, and it rolled by about a block away. Cybertruck exists. Oh, I found my reservation. Oh, there it is. Okay. All right. Where's I found my Cybertruck reservation. It was like in the last email that I was willing to check. Your Cybertruck is confirmed. I guarantee you they're going to put me at the last, the end of it. But anyway, give me where's the order tracker? Let's find out. We'll do this together, okay? Here's the link. Oh, thank you. All right, here we go. No, oh my Lord. Well, there are two numbers. There's a Google Sheet and no tion.inc.com/cybertruck-reservation-calculator. Oh, haha, the Cybertruck reservation calculator. Well, you have to remember what you put your number in without the RN. Oh, well, it already does it. Okay. When will I get my Cybertruck? What? Hold on. What is this? I am 150,805 in line. Huh. Your anticipated delivery day is 7 months after the first delivery. That would be June then. Huh. So I'm number 150 and 805. That's funny. That's our area code. And then they want to sell you merch for your reservation number. You gotta be kidding me, man. I ain't putting my reservation number on my merch. They put Cybertruck merch there. That'd look good. That would be smart. But not with my RN number, man. There should be like a box that's like, uncheck that. Tell us something in German. 9! Verdammt nochmal. That's a good number. What, really? Is it really? That's not bad. Oh, okay. You're 345 in line? Wow, that's actually really good, though. Wow, somebody here. Based on your reservation number, you are number 2773888 in line. Oh, somebody else wrote that. That is kind of cool, though. That little calculator here. Somebody else posted a different calculator. Maybe if I go to the other website, it'll give me a different answer. Let's see. sites.google.com/view/Tesla reservation tracker home. Oh, this looks fancy. View reservation tracker. Ha! Verify reservation is in tracker. I'm going to click that one. Watch, they deleted me. That'd be so funny, man. It just stops working. That did no good. Google script sucks. Oh, here we go. Oh, okay. Wow, it's just a giant spreadsheet somebody has here with all the different reservation numbers. Oh, that's kind of cool. Wow. Oh, that's really cool. Yeah, whatever. When did I reserve it? How am I supposed to know? Yeah, I have no idea. Probably the day it was announced. It was like $100 to reserve it. Like, why would you not reserve it? Anyway, okay. All right, good. So we're now, let's see what other people are talking about in the Twitter sphere. So, okay. No, not too much news here. Getting a little quiet. Let's listen to Bloomberg for a moment.
This one, again, he went over with the goal of espousing American support for its closest ally in the Middle East, being Israel, but also to kind of counterweight, if you will, with the Arab leaders as well. So the fact that the hospital bombing yesterday, the fallout from that, the reaction of the White House to side with Israel, even though the president did cite intelligence for that, it didn't sit well with the Arab leaders. So the goal of at least counterbalancing this visit with the Arab leaders in the region.
Ooh, is Ross gave a little bit of talk here. Tesla's report clearly says Cybertruck deliveries in November. Yep, we saw that. Yep. Oh, I guess Ross went on Fox. That's cool. All right, we'll keep listening here.
To make for Israel as well as Ukraine. We've heard $100 billion for a price tag. Julie Fine. It strikes me if there was ever a time for a primetime address, we're seeing this would be 8 p.m. The venue would be the Oval Office. What would be the message to the American people?
Really, the message to the American people is please support this effort. Try to understand what is happening to the best that you can. And the president really has to explain what he saw, why he feels the way he does with the information he is getting from intelligence, and really basically say the United States is here to try to stabilize what is happening in the world and save human life at the same time. So he's really got to get the American people on board with the fact that he believes they're doing the right thing. He's also sending a message to Congress that they have to get this aid package done, which again, then goes to some dysfunction right now in Congress.
Yeah.
Absolutely. And we're going to have more on that in just a minute. Bloomberg's Julie.
Let's jump for a sec. Let's listen to CNBC for a sec.
Almost all of the films that you, your family, and friends love is now working long-term with Netflix. Skydance Animation has moved its animated films over from Apple TV Plus to Netflix exclusively for years and years to come. That is animation is the one category Netflix has not done a good job in. And I think they would admit it. This is a huge, bold move. There's two animation companies, right? There's Disney and there's Universal. Universal has certainly taken that crown over the last few years. I think it would have been unimaginable to put Netflix in the same category as Disney and Universal Illumination from an animation standpoint. And I think today you can do that, Karen.
So, Rich, if you look at Netflix, they're the pure play. They're the leader of the pack. They're running away from the herd, as you just said. Who is the first in that herd that's chasing them?
I mean, look, Disney's by far the best position to be number two. I think the real question is, what exactly is Disney trying to create? Obviously Bob Iger spoke on CNBC in that, sort of epic David Faber interview from Sun Valley several months ago, talking about sort of how they're going to strategically shift. Are they keeping ESPN and ABC? They're obviously buying Hulu soon for Comcast, probably for a much bigger price than the $9 billion Disney would like. I mean, this is a pretty important strategic asset to Disney. It's hard to imagine it's not a 13, 14, 15 billion type number to Comcast. And so what do they do with Hulu? How do they fold it into Disney Plus? What happens to ESPN? How does that go over the top? Like, whether or not Disney focuses on what they're good at, which is family entertainment, or they try to be much, much broader and try to take on Netflix globally, I think that's still the big unanswered question facing Iger and Disney over this next 12 to 18 months.
Yeah, I don't know. Disney. Disney's an interesting one. They had the whole go woke, go broke problem. But I do think Iger's a smart guy, and I think he'll be able to. Like, one of the things that pissed me off is they were spending so much money on the content creation, but they weren't actually making good new content, in my opinion. Like, it's been since Frozen since we've had a really good new character to get people into the parks. And the parks are what make the money. That's where people just go spend happy. And they're just not focusing on the parks and the cruises, which they should be. And the people who work for Disney, they're like, what the hell? We make the money, and then they blow it. They're creating like bad morale within Disney. It's bad. I think Iger's finally rejiggering and investing again where they should be investing. Just those parks, man. That's when people have fun. I love the Disney parks, but I don't know. Anyway, 10-year treasury now 4.911%, highest level since 2007. We're going to look at the break even here in just a moment. We're looking at, first of all, the yield curve inversion, still negative 30.9 basis points, 2 years basically flat. You've got, let's see here, try to get the 5-year break evens as well. 5-year break even, inflation rates, 5-year break even, 2.36. This keeps going up, man. Not good. We'll see what J-Powell says tomorrow. That's going to be a big deal. That'll really help give us a little heads up of what's coming November 1st, other than the expiration of the 2023 HouseHack investment opportunity. Read the offering circular there. Okay, we are now 17 minutes away from the Tesla earnings call.
He's talking about the two obstacles in front of them were sleep and gaming.
Right.
So it's hard to combat sleep, but you can combat gaming. So I think the market would give them more than a pass on that. I think they would champion that.
Yeah.
Yeah, I agree with that. You're searching for hours during the day to occupy eyeballs. But what I found interesting is the Comcast angle of it, because we've talked about Hulu, and if Hulu is worth greater than was suspected, then that's definitely a bullish call on Comcast. So Comcast is thrown in that would you rather.
What's your take on a recession always happening 10 months after the Fed stopped raising rates? Yeah. Well, it actually could happen. It definitely could happen. I don't know that any of us are going to care if there's a shallow recession, though. That's the thing. Like, okay. Let's listen to this.
Hours, Melissa, despite missing on the top and the bottom line, and that's because the gross auto margins, excluding zero-emission vehicle credits, appear to have come in slightly better than what the street was expecting. Let's do the numbers and then the numbers within the numbers that people are really paying attention to. Earning 66 cents a share in the third quarter, Tesla was shy of expectations of 23 cents a share. Revenue light of expectations, but not by a lot. 23.35 billion versus 24 billion. Gross auto margins, excluding credits, expected at 17.5%, came in by most calculations at 17.9%. And then you have these numbers. Adjusted EBIT margin is 16.1%. That's down from 23% a year ago. 7.6% operating margin. It was 17% a year ago. And operating cash flow of $3.34 billion. Then there is the question of deliveries. And we just got some news within the last couple of minutes. First of all, when they put out the release, they reaffirmed their guidance of delivering 1.8 million vehicles this year, which means they need to have a fairly strong fourth quarter, a record fourth quarter, we should say, or record quarter for deliveries. And then the Cybertruck announcement. The company said in the release that they are on schedule for deliveries this year. And just a few minutes ago, Elon Musk tweeted out that they will do a delivery event at Giga Texas on November 30th. So as you take a look at shares of Tesla, keep in mind that the real news is going to come here in a few minutes, Melissa. That's when the conference call begins. And a lot of questions Elon Musk will be facing regarding pricing pressure, particularly in China and in Europe. Now,
No. That is not what PP stands for. No.
Handpicked questions, if you will. And the pricing questions didn't really come up until well into the call. Let's see how quickly they address it this time around and what kind of news we get. And again, that starts at 5:30.
Yep. Phil, thank you. Keep us posted. Phil LeBeau. It is a peculiar move in terms of the after hours. Not really a big movement as we normally see from Tesla. What do you make of this quarter?
It's amazing how low vol it is when you consider. And by the way, if you look at the chart, also where it tested in these aftermarkets, and I realize it's aftermarkets, but this.
Does Tesla deserve a 70 PE given these earnings? No. But what's being priced into that is Hopium on Cybertruck, Optimus, and FSD. And I actually think those are real things that will take that PE and turn it upside down so damn fast it doesn't even freaking matter. So, let's look, for example. So financial analysis, end of the year, we're looking at $3.33. Wow, the number keeps going down. 333, you're sitting at 240. What are you at right now? 242, something like that. 242 divided by 333 in the stock. It's sitting at 72.67. You have to base it on growth, forward growth. With how bad these numbers are this year, dude, the growth is going to be amazing next year. Think about how high the growth, the growth will be when rates start coming down. Oh, it'll be delicious. Or we're in a recession, and it's even worse. I don't think that, though. Okay, so we're expecting 37, 28.7, 27.8, and 20.2 in growth percentages. That's an average of 28.4. 72 divided by 28.4 puts Tesla at a PEG ratio of 2.5 right now. That's not that terrible. But what is terrible is, what's it called? I have no idea what I was going to say. I read this comment about somebody basically saying I look old in my profile picture, and then I just forgot what I was going to say. So I'm like, wow, thanks. Thanks, Nico. I'll see you too. All right, whatever. So where were we? Oh, right. Yeah, end phase is like a PEG ratio of like 1.2, but then, people are like, well, will solar ever recover? It's like, oh, yes. Just gonna take some time, bro. All right, let's talk about Cybertruck. Let's listen in.
I think the whole argument against Tesla for me is valuation and competition. I realize they're far ahead, but I'm not ready to give up on Detroit and EV.
The one thing in the Tesla release I thought was interesting was the deposits, which the street was looking for 1.03, came at 894. And so I'm wondering, why is that? What is it? Fewer deposits? You need a smaller deposit. Mm-hmm. Is that, how much is that translated historically into sales? How good of a read is that?
Yeah,
I don't know.
We'll have much more on Tesla's quarter in just a few minutes. The conference calls will get underway in about 10 minutes time. We'll also have Gene Munster on to give us his analysis. Meantime, let's get to the unstoppable 10-year. Yield today closing in on 5%, topping out at 4.93%. That, again, is the highest level since 2006. Today's spike pushing rates on a 30-year fixed mortgage to 8%. Home buyers have not seen that number since 2000. As you'd imagine, all this taking a toll on the builders. XHB down over 2.5%, and everything surrounding the housing trade, RH, Wayfair, Sherwin-Williams, Masco, you name it, they all got hit hard too. Gold, a rare bright spot in the market, dominated by losses today. It is now up by nearly 5.5% this month, just $30 away from $2,000 an ounce. Guy.
Think it's just getting started. I'll shelve that for a second. The bond market is absolutely the story. Rick Santelli was on here a couple weeks ago, said a close above 4 3/4 would sort of set the path to 5%. We saw a pullback after the Middle East situation a couple weekends ago to 4.55, and now here we are at 4.91 or so. This is not good. And again, Japanese trying to defend their bond market, their currency. They're selling treasuries. The Fed's not buying. Who's buying our debt? Somebody is, but at a much higher yield, and that's what you're seeing.
Yeah, I couldn't agree more. Gold's going a lot higher. A lot higher. Gold's traded great through a difficult period. I'll go back to us through the mortgage market and just talk about that Mortgage Banking Association index of mortgage applications that are in is now 15%, the all-time low after the great financial crisis. You tell me what's going on in the housing market. I don't care about lack of supply. I'm telling you, prices come down when you can no longer afford one half the house, because it was all about monthly payments. It was all about really what you could afford to live on. And I just, these numbers speak for themselves. I think what's going on in the bond market is, somewhere around 5%, we're going to run into a little resistance. It's not going higher forever. Guys' arguments about central banks are dead on. And at some point, the economy's not going to look like 6% growth in the third quarter. That's not helping this on top of Treasury. But this was a big day, and equities gave ground by the end of the day.
So when you look at treasuries and when you look at rates, the Fed has to actually say they're going to stop, and they're not saying that. They have a vested interest in saying they're not going to stop. They have to continue to fight inflation. But when you see the Fed stop, and you know that cut is coming, it's sooner rather than later. Yeah. You're going to see rates crater from here.
Yes.
And that
correct.
Is the equity market. So I'm not
higher but higher for longer. You're saying is not higher for longer.
I think
you said sooner than later.
I think from August 30th, we've seen treasuries increase by 84 bips. So what is the Fed doing at this point? The market's done it for them.
Market's done a lot. The question is higher for longer, as we were saying yesterday, is a for the Fed, and it is something that I think rather than cutting is at least everything they've told us. You may be right.
I just don't think faster. We all know that the Fed only controls the short end, right? The Fed doesn't control the long end. So the issuance is a problem for me.
Huge.
That's where I have the biggest problem here. But I do think that the markets overcorrect, they overshoot. And I think that rates are in the process of overshooting with everything that's going on in this volatile world.
Well, just let me counter with one thing. The higher the rates, the higher the issuance will continue to go to fund the higher rates. I mean, it's bad. It's a vicious cycle.
Yeah, but people will start to buy that 10-year. Once we start to cut, people are going to start to buy the 10-year. And it's inversely correlated, obviously.
Coming up, major profit problems for Morgan.
So right. Finally, somebody on the mainstream media that's like, yo, realize as soon, and I've said this so long, like grab people and just shake them by the shoulders and go, you realize as soon as the Fed says they're done, people are gonna be like, what? They're done? We should buy bonds then, because it's not gonna keep falling. And then people go rush to buy bonds because you're getting guaranteed risk-free 4.9% for 10 years. You got people who are like, well, I'm going to put 4.9% in Robinhood. Congratulations. You're going to put 4.9% in Robinhood, and you'll get that yield maybe for 6 months to 12 months. And then what will happen? That rate will come down. At the same time that rate comes down, if you had bought the 10-year Treasury, you would actually not only have the 4.9% rate locked in, okay? Locked in for 10 years, but you'd also have capital appreciation, which is so of course, when the Fed says they're done, you would expect a plummet in Treasury yields. And it'll be fantastic. It'll be so great. You'll see Enphase skyrocket, Tesla, all the interest rate sensitive stuff. No guarantees. Remember, where's my little disclaimer? We said it earlier. I'm a real estate broker. I'm a financial advisor. Becoming a stockbroker. This video is not intended to be personalized financial advice. This video is generalized perspective and is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Finally, somebody says it though. Like they're right. And it's going to be so entertaining. The short squeeze on treasuries will be delicious. It's going to be so good. The problem is timing it. It's very, like, we know it's coming. It's just when. It's like, we know that, Nikola is going bankrupt, or was, at least at the time. And it's, finally seems to be better. It was just a matter of when after that SPAC run up to $80, We knew DWAC was going to go from 150 down, probably back towards $10. It went down to $15. It was just a matter of when. That's always the tough thing. It's not what's going to happen. It's when's it going to happen. That's the toughie. Anyway, earnings call is supposed to start in about 4 minutes. We are waiting for the earnings call to begin. La, 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 la. By the way, Las Vegas Sands also reported. We could take a peek at what they have to say. But otherwise, 3 minutes, 52 seconds. I think we got music. Yeah, we got some cybery music there ready, already rolling. I'm not going to play it because every time I do, they just end up demonetizing me. But not that there are ads when you watch this live anyway, so I guess it really doesn't matter. But, okay. Sands authorized a $2 billion stock repurchase. They actually beat $2.8 billion versus the estimate of $2.71. Property EBITDA was 1.12 versus the 1.06 billion expected. And then we got, let's see here, Las Vegas Sands authorized, $2 billion repurchase. Oh, interesting. All right. Anyway, Las Vegas Sands expanding for their Asia expansion. Wow. That's very interesting. Tesla's November 30th Cybertruck delivery event overshadows profit plunge. Oh, that's a harsh line there from the Suits. Suits not very happy about that. Okay, earnings call is about to begin. About 2.5 minutes away here. Let's keep listening here, though, for a moment.
Both where asset allocation is and where we probably are, and it says something about the equity market, but it certainly says something about where at one point I would say the mismatch between where banks were funding and what they had to pay depositors is so different. Now, what we've seen so far in 3Q from the money center banks is that net interest income, while is under some pressure, was a lot better than expected. So I just think that the dynamics around balance sheet at some of these places is the most important thing. But the wealth management revenues, look, I still get back to the fact that Morgan Stanley has de-risked their business massively. And at some point, the valuation, which trades at a premium to peers,
when people rush into bonds, will they take a hit? Will stocks take a hit initially? No, I personally don't believe so, because I think people are going to move from money markets to bonds because they're going to want to lock in that money.
Okay, some are good, some are bad. But where they get the higher multiple is from the wealth management business, right? And so for that to be a miss, when you have a higher multiple and you miss, then you get that higher multiple ding on your PE. It was a little more of a ding than I thought maybe it should be, but I understand directionally for sure.
Investment banking disappointing, wealth management disappointing. I mean, this is that three-pronged animal that was great for them for a while, but when two of the three sort of do poorly, this is what happens. And this move today is on back of a move over the last 4 or 5 months that the stock was just trending lower, which is disappointing. $75, which is where we're trading. Line in the sand, go back to June of last year, and this is where it bounced off of. So I think it needs to hold here, but if the rest of the banks start following in suit, Morgan Stanley won't be spared.
I thought it was interesting also that the CEO, James Gorman, said that when the Fed starts cutting, the calendar is going to, quote unquote, explode in terms of deals.
Yeah.
So.
And we've had a couple of deals recently, but
cyber music's still going
here where they need to have this deal level. But when you look at the financials, two different animals, Morgan Stanley versus JP Morgan. Morgan Stanley down 12% year to date. JP Morgan is up 8 and change percent year to date. So people are hiding in JP Morgan until the geopolitical world clears, until the economic world clears. You don't have.
Hey, let's pray for J-Pow giving us dovishness tomorrow. Or he just hawks us, and then we're like, damn. Yeah, still on cyber holding music here, waiting for this earnings call to begin.
Minutes, 1 minute to be exact. Tesla shares are up by 1%. We'll bring you all the headlines as they come in. You're watching Fast Money. We're live at the NASDAQ market site in Times Square. Back right after this.
I love the little tunes they have over there. Kind of like, we need...
Gain the lead.
Yeah. All right, now let's get ready for this earnings call so we can be manipulated. Nope, still on cyber music for the earnings call. Waiting for the earnings call to start any moment now. Although they're usually late. Let's go to Bloomberg, or should I say Doomberg? Nope, they're on commercial too. How boring. Boring. Anyway, I'd say usually they're like 2 or 3 minutes late. They're not usually that bad. Huh? I think the music stopped. Oh? Trying to figure it out.
Want here, Dave?
Yeah. No. Audio is working. Feed's playing. The music stopped. That means they're getting close. It's getting close. Any moment now. See if it's any faster on Twitter. Not that I think there's a speed issue, but I could just stream Twitter too. Oh yeah, they just posted 1 minute ago on Tesla.
On the question
Twitter.
queue. But before we jump into the Q&A, Elon has some opening remarks. Elon?
Thank you, Martin. So just a Q3 recap. Our last quarter was impacted by downtime for global factory upgrades that will help us reduce cost per vehicle as well as increase production. We remain focused on 3 main objectives, which is the cost reduction of our products, investments in artificial intelligence and other growth projects like Optimus, and continued free cash flow generation. Regarding vehicle cost, our team was able to reduce the cost per vehicle further in Q3, despite headwinds from factory idle costs and ramp up of new factories. And we believe there's still meaningful room for improvement there. Regarding Autopilot and AI, our vehicles now driven over 500 million miles with FSD beta, full self-driving beta, and that number is growing rapidly. We recently completed a 10,000 GPU cluster of H100s. We think probably bringing it into operation faster than anyone's ever brought that much compute per unit time into production, since training is the fundamental limiting factor on progress with full self-driving and vehicle autonomy. We're also seeing significant promise with FSD version 12. This is the end-to-end AI where it's photon count in, controls out. Or really you can think of it as there's just a large bit stream coming in and a tiny bit stream going out, compressing reality into a very small set of outputs, which is actually kind of how humans work. The vast majority of human data input is optics from our eyes. And so we are, like the car, photons in, controls out, with neural nets, just neural nets in the middle. It's very interesting to think about that. We will continue to invest significantly in AI development, as this is really the massive game changer. And I mean, success in this regard in the long term, I think, has the potential to make Tesla the most valuable company in the world by far. If you have fully autonomous cars at scale and fully autonomous humanoid robots that are truly useful, it's not clear what the limit is. Regarding energy storage, we deployed 4 gigawatt hours of energy of storage products in Q3. And as this business grows, the energy division is becoming our highest margin business. Energy and service now contribute over $500 million to quarterly profit. The Cybertruck, I know a lot of people are excited about the Cybertruck. I am too. I've driven the car. It's an amazing product. I do want to emphasize that there will be enormous challenges in reaching volume production with the Cybertruck, and then in making the Cybertruck cash flow positive. This is simply normal for when you've got a product with a lot of new technology, or any new vehicle, brand new vehicle program, but especially one that is as different and advanced as the Cybertruck, you will have problems proportionate to how many new things you're trying to solve at scale. So I just want to emphasize that while I think this is potentially our best product ever, and I think it is our best product ever, it is going to require immense work to reach volume production and be cash flow positive at a price that people can afford. Often people do not understand what is truly hard. That's why I say prototypes are easy, production is hard. People think it's the idea, or you make a prototype, you design a car, and it's not as though designing a car is that just anyone can do it. It does require taste. It does require effort to design a prototype. But the difficulty of going from a prototype to volume production is like 10,000% harder to get to volume production than to make the prototype in the first place. And then it is even harder than that to reach positive cash flow. That is why there have not been new car startups that have been successful for 100 years, apart from Tesla. So, I just want to temper expectations for Cybertruck. It's a great product, but financially, it will take, a year to 18 months before it is a significant positive cash flow contributor. I wish there was some way for that to be different, but that's my best guess. So really the demand is off the charts. We have over 1 million people who have reserved the car. So it's not a demand issue, but we have to make it. And we need to make it at a price that people can afford. Insanely difficult things. In conclusion, we continue to focus on ramping production while maintaining positive cash flow. And we continue to target and expect to have around 1.8 million vehicle deliveries, as stated earlier this year. The Tesla AI team is, I think, one of the world's best, and I think it is actually by far the world's best when it comes to real-world AI. I'll say that again. Tesla has the best real-world AI team on Earth, period. And it's getting better. And lastly, I wanted to thank all of our employees who are making a lot of extra effort during uncertain times. Thank you very much for your hard work and the impact that you're making.
Thank you very much, Elon. And
that's a no Zach earnings call for you. Let's do questions now.
Vehicle deliveries in Q3 outpaced production, and we had yet another record quarter of profitability in our energy business. Congratulations to the Tesla team for their continued focus on operational excellence as we navigate through a period of economic uncertainty, higher interest rates, and shifting consumer sentiment. As Elon mentioned, our Q3 operational and financial performance was impacted by planned downtimes for our factory upgrades.
Here's your new CFO.
To allow for further factory improvements and production rate increases. Despite such factory shutdowns, our cost per vehicle decreased to approximately $37,500. We saw sequential decreases in material costs and freight. Reducing the cost of our vehicles is our top priority. On the operating expenses front, R&D expenses continue to rise due to Cybertruck prototype builds and pilot production testing, combined with spend on AI technologies like full self-driving, Optimus, and Dojo. We have and will continue to make investments in these areas, and hence our capital expenditure and R&D will continue to grow in the near term. However, our focus is to continue making investments through positive cash flow from operations. This year itself, we have generated operating cash flows of approximately $8.9 billion and free cash flows of approximately $2.3 billion. Our other businesses are becoming more prominent on a standalone basis, with energy business leading the charge primarily from the growth in megabyte deployments. Our services and other businesses on a year-on-year basis also continue to show positive momentum as we benefit from our growing fleet. As regards our pricing strategy, in addition to what we have shared before, I want to elaborate that most car buying happens with one or other form of financing, and hence we also view pricing in terms of monthly costs for the customer. And therefore, as interest costs in the US have risen substantially, it has required us to adjust the price of our vehicles to keep the monthly cost in parity. We've tried to offset such adjustments via our focus on reducing costs. However, there is an inherent lag in cost reductions, which in turn impacts margins. To that extent, we recently announced a partner vehicle leasing program in the US, whereby you can get a standard range Model Y for as low as $399 a month. In conclusion, as we navigate through a challenging economic environment, we're focused on reducing costs, maximizing delivery volumes, and continuing making investments in the future, in particular AI and other next-generation platforms. We believe this strategy positions us well for the long term. Once again, I would like to thank the Tesla team for their efforts in the last quarter.
Thank you very much. And now let's go to investor questions. The first investor question comes from Craig. How many Cybertruck deliveries do you anticipate for 2024?
Here we go.
It's difficult to make an accurate guess at this point. Going back to what I said earlier, that the ramp is going to be extremely difficult. Like I said, there's no way around that. If you try to make, if we just try to do some copycat vehicle design, of which there are literally 200 models that are slight variations on a theme in the combustion engine world, just distinctions without a difference, then it's really not that hard. But if you want to do something radical and innovative and something really special like the Cybertruck, it is extremely difficult because there's nothing to copy. You have to invent not just the car, but the way to make the car. So the more uncharted the territory, the less predictable the outcome. Now, I can say that if you say, well, where will things end up? I think we'll end up with roughly 250,000 Cybertrucks a year. But I don't think we're going to reach that output rate next year. I think we'll probably reach it sometime in 2025. That's my best guess.
Thank you. The second question is, can you provide a progress update on the 4680 cell, particularly progress towards performance improvements and cost savings outlined on Battery Day? Thank you.
Of course, he didn't answer.
Sure thing, Martin. 4680 cell production in Texas increased 40% quarter over quarter. Congrats to the Texas team for producing their 20 million cell off of line 1. Texas is now our primary 4680 facility. We're heavily focused on quality. Scrap is down 40% quarter over quarter. With the increased volume and yield improvements, cell costs consistently improved month over month within the quarter, although we have a lot more work to do to achieve our steady state goals. And that is our priority. The Cybertruck cell, with 10% higher energy than our Model Y cell, started production on line 2 in Texas. This quarter, we convert to building 100% Cybertruck cells to simplify and focus the factory as we ramp all 4 lines in phase 1 over the next 3 quarters. Phase 2 of the Texas 4680 facility is currently under construction. The additional 4 lines incorporate further capital efficiencies over phase 1, and our target is for them to start producing in late 2024. Lastly, in Cato, we're retooling to enable large-scale pilot runs of our next-generation cell designs. Cato's long-term goal is to be the launch pad for new cells, one generation ahead of our mass production facilities, enabling faster iteration and smoother ramp-ups of new designs.
Thank you. The next question from institutional investors, could you please provide an update on capacity expansion plans for companies' factories in Berlin and Austin, and the opening schedule of Gigafactory Mexico?
Berlin and Austin factory, the current priority is actually maximize the output from our existing lines by laser focus on efficiency improvement. As always, maintaining a high quality and reducing per unit cost will be as critical as growing the production volume. For Mexico, we're working on infrastructure and factory design in parallel with the engineering development of the new production that will be manufactured there. That's all I can share for that.
Yeah, in Mexico, we're laying the groundwork to begin construction and doing all the long lead items. But I think we want to just get a sense for what the global economy is like before we go full tilt on the Mexico factory.
Whoa.
I'm worried about the high interest rate environment that we're in.
Whoa.
I just can't emphasize this enough that the vast majority of people buying a car is about the monthly payment. And as interest rates rise, the proportion of that monthly payment that is interest increases naturally. So that's if interest rates remain high, or if they go even higher, it's that much harder for people to buy the car. They simply cannot afford it. And we are tracking, I believe, at this point for Model Y to be the best-selling car on Earth, but not just in revenue, but in unit volume. If you compare that to the other vehicles that are, number 2 and number 3 and whatnot, they cost much less than our car. So, we're just hitting law of large numbers situations here. I know people want us to advertise, and we are advertising. I think there is something to be gained on the advertising front. I don't think it's nothing. But informing people of a car that is great that they cannot afford doesn't really help. So that is really the thing that must be solved, is to make the car affordable, or the average person cannot buy it for any amount of money, or they simply can't afford it. They can't afford it. So this is a big deal.
Okay, thank you very much. The next question is, when do you expect Model 3 Highland to be available in the US? I just wanted to address that, unfortunately, we don't answer product-related questions and timings on earnings calls, so let's go to the next one. Current sell-side consensus assumes that Tesla will deliver 2.3 million vehicles in 2024, representing 28% growth versus 2023 guidance. Is this growth rate achievable without any mass market launches in 2024? And when does Tesla expect to return to its 50% long-term CAGR?
Thanks for the question. When we look at 2024, there are a lot of moving pieces. Elon just talked about what is happening in the macroeconomic environment. So we're focused on growing our volumes in a very cost-efficient manner and are carefully reviewing all our options, and we'll be able to provide a much more meaningful update at our next earnings call.
Yeah, I mean, the risk of stating the obvious, it is not possible to have a compound growth rate of 50% forever, or you will exceed the mass of the known universe. But I think we will grow very rapidly, much faster than any other car company on Earth by far.
Thank you. Next question is, do you have an approximate timeline in mind for the robotaxi, driven or non-driven? What excites you most about how this project is progressing?
Well, the robotaxi is necessarily non-driven. I guess I'm very excited about our progress with autonomy. The end-to-end, nothing but nets, self-driving software is amazing. I drives me all around Austin with no interventions. So, it's clearly the right move. So it's I don't know, it's really pretty amazing. And obviously that same software and approach will enable Optimus to do useful things, and enable Optimus to learn how to do things simply by looking. So, extremely exciting in the long term. As I mentioned before, given that economic output is number of people times productivity, if you no longer have a constraint on people, effectively you've got a humanoid robot that can do as much as you'd like. Your economy is quasi infinite, or infinite for all intents and purposes. So, and I don't think anyone's going to do it better than Tesla, not by a long shot. Boston Dynamics is impressive, but their robot lacks a brain. Sort of like the Wizard of Oz or whatever. Good man. Yeah, lacks a brain. And then you also need to be able to design the humanoid robot in such a way that it can be mass manufactured. And then at some point, the robots will manufacture the robots. Now, obviously, we need to make sure that there's a good place for humans in that future, that we do not create some variant of the Terminator outcome. So we're going to put a lot of effort into localized control of the humanoid robot. So basically anyone will be able to shut it off locally, and you can't change that. Even if you with like a software update, you can't change that. It has to be hard coded.
Thank you. The next question is, why was the price dropped on FSD if it is getting better and robotaxi is expected so soon?
Well, we just wanted to make it more affordable, so more people could try it. I think over time the price of FSD will increase proportionate to its value. So I would regard the current price as a kind of a temporary low.
Thank you. The next question is again on FSD. Mercedes is accepting legal liability for when its level 3 autonomous driving system Drive Pilot is active. Is Tesla planning to accept legal liability for FSD? And if so, when?
No.
Well, there's a lot of people that assume we have legal liability, judging by the lawsuits. We're certainly not being let off the hook on that front, whether we would like to or wouldn't like to. So,
I mean, I think it's important to remember for everyone that Mercedes' system is limited to a few roads in Nevada and some certain cities in California. It doesn't work in the snow or the fog. It must have a lead car, marked lanes, only 40 miles per hour. Our system is meant to be holistic and drive in any conditions. So we obviously have a much more capable approach, but with those kind of limitations, it's really not very useful.
I think some people understand the profundity of the Tesla AI system. Most people, very, very few. It's basically baby AGI. It has to understand reality in order to drive. Baby AGI.
That's artificial general intelligence.
The next question on Optimus. Will Optimus be working on Gigafactory lines next year? If so, how many would you guess will be deployed?
I think at this point we are not ready to discuss details of the Optimus program. but we will provide periodic updates online. So as you can see, we're, Optimus a year ago could barely walk, and now it can do yoga. So a few years from now, it can probably do ballet.
Sounds good. And the last question from investors is, neural net path planning represents a significant advance in capability and safety for FSD. What steps is Tesla taking to make this technology available outside the US?
Yeah, our approach has been to try to get it, like the more places we try to make it work, the harder the problem is. So the reason we don't do it in all countries simultaneously is that it would take much longer to make it work anywhere at all. So that's why it's currently just North America. And also for most parts of the world, you have to get approval before deploying things. Whereas in the US, you can deploy things at risk, or at least you take liability for what you deploy. So it's whereas most countries require some sort of extensive approval program. So we only want to go through that extensive approval program when we think it's kind of ready for prime time in that country. I apologize that it's not in those countries, but we keep finding ways to make it better, and it needs to drive. It needs to drive such that it exceeds even unsupervised, significantly exceeds the probability of injury of a human. Or significantly better, a lower probability of injury than a human by far. I think we're tracking to that point very quickly. Obviously, in the past, I've been overly optimistic about this. The reason I've been overly optimistic is that the progress tends to sort of look like a log curve, which is that you have kind of rapid initial improvements, that if you were to extrapolate that sort of rapid, fairly linear rate of improvement, you get to self-driving quite quickly, but then the rate of improvement curves over logarithmically and starts to asymptote. That's now happened several times. I would characterize our progress in real-world AI as a series of stacked log curves. I think that is also true in other parts of AI, like LLMs and whatnot. Series of stacked log curves. Each log curve gets higher than the last one. So if you keep stacking them, keep stacking logs, eventually you get to FSD.
Thank you. Let's now go to analyst questions. The first question comes from Will Stein from Truist. Will, please go ahead and unmute yourself.
Great. Thanks so much for taking my question, and thanks for all the updates today. We learned earlier in the call, it sounds like you don't think the truck will ramp to significant volume until its third year of production. Should we have a similar anticipation for the ramp of the next-gen platform, or is there any reason that we should be maybe more optimistic or pessimistic about the ramp profile there? Thank you.
Yeah, I mean, to be clear, it's not really the third year of production. It's kind of like the 18th month of production is roughly my guess. So it's just that it'll happen is that it starts this year, spans next year, and gets to 2025. So technically there are 3 calendar years in there, but there's actually only 18 months, not 3 years. I would be very disappointed if it took us, and that would be shocking if it took us 3 years. But 18 months from initial deliveries to reach volume and reach prosperity with an immense, I can't tell you how much the blood, sweat, and tears level required to achieve that is just staggering. I've been through it many times.
And then here we go again.
Similar path for the next gen platform?
I mean, there's like unique complexity to cyber.
Yeah. I mean, Cybertruck is. Yeah, I mean, we dug our own grave with Cybertruck. Nobody, in general, I probably nobody digs their grave better than themselves, and so, it is. Cybertruck is one of those special products that comes along only once in a long while. And special products that come along once in a long while are just incredibly difficult to bring to market, to reach volume, to be prosperous. It's fundamental to the nature of the newness. So now the sort of high volume, low cost, smaller vehicle is actually much more conventional. In terms of like the technologies we're putting into it, we didn't have to invent how to bend full hard stainless steel or have mega 9,000-ton castings or the largest hot stamping in the world or new high voltage, low voltage architectures. It's learning from everything we've done. So we hope it will ramp faster than the technology.
We also went through like a ruthless simplification exercise.
Yeah, we did. There's significantly less parts, and you're only as fast as the slowest part. If you have less of those, that means you could probably be faster. Yes, exactly. I mean, that said, it's still pretty revolutionary in how we're going to build it. It is. Yes, it's the manufacturing approach for the high volume small vehicle is revolutionary. But not revolutionary quite in the same way as the Cybertruck. I think it will be quite a fast ramp. So as Lars was saying, we're doing everything possible to simplify that vehicle in order to achieve a units per minute level that is unheard of in the auto industry.
Yeah, I mean, the simplification makes it easier to automate. It also makes it lower cost. Yeah, like it's intrinsically lower cost.
Yeah. Let's be clear, it'll be cool, but it's utilitarian. It's not meant to be, fill you with, awe and magic. It's can get you from A to B. And it'll be still beautiful, but it's utilitarian. It's a utility.
Doesn't have 14 inches of travel on its suspension.
Yeah, as an example. Yeah. So, I mean, the Cybertruck has a lot of bells and whistles.
All right, thank you very much. Let's go to Pierre Ferragu from New Street Research.
Hey, can you hear me fine? Yes?
Yes.
Hey, I have first a follow-up question on FSD and pricing and adoption. So I agree with you that as FSD improves, we should see its value increasing. But I guess the ultimate value of FSD, which is to be able to handle a robo-taxi, is not going to necessarily interest everybody. And you have a bit of a degraded version that would be like a chauffeur service where the car drives by itself, but you still have to be in the car and around. And then there is the hands-on, eyes-on version of the service. And I guess, there should be much lower cost, lower feature kind of variants of the service that could have a very large penetration on your install base and more expensive one that would remain at a lower penetration level. So I'm just wondering if you're taking that. And last but not least, the simplest version of FSD are available and are going to work from a technical perspective probably before the ultimate robotaxi version can work, if ever. And so I'm wondering how you take that into account in how you're thinking the financial contribution of FSD over time. and whether you could evolve your pricing along that kind of tiers to increase adoption.
Yeah, I mean, a fully autonomous vehicle, I think here you know, sort of the economics of a fully autonomous vehicle are truly astounding in a positive way. When you look at passenger vehicles today, they only get about 10 to 12 hours of usage per week. That's, you know, if you drive an hour and a half a day on average, that's roughly 10 hours a week out of 168 hours. And then there's also, you got to have parking and insurance. You got to take care of the car. It's like there's a lot of overhead.
This is not good.
I mean, yeah, it's like the economics of the system are just insanely positive. If given that the car, like all of the cars we're making and have made for a while, we believe are capable of full autonomy. So then if you're able to, say, increase the utility of that car by, I don't know, a factor of 5, which still only means that it's being used for maybe 50 hours a week out of 168. So you're still assuming that still assumes less than a third of the hours of the week is doing something useful. You've increased the value of that by 5, but it still costs the same. Like you have something, then we're a hardware company with software margins.
Pierre, do you have a follow-up? Yes, I'd have actually a follow-up on a different topic for you, Vaibhav, if that's okay. It's about like your gross margin in the quarter. Could you give us a sense of like in how the gross margin evolved sequentially? How much was the impact of idle costs? How much was like the sequential benefit, I imagine, of production ramping at Berlin and Austin? And then I saw like this massive jump in energy storage, very strong positive surprise. So if you can give us the background on that and tell us, you know, how we should think about that gross margin going forward.
Okay, thanks for that question. So in terms of, we have a few different aspects of your question. So if I just look at from Q3 perspective, you know, obviously factory idle time had an impact. It did impact by, I mean, I won't give you the exact percentage, but it had decent impact for the quarter. And, you know, when you look at the other pieces which we're trying to do, we did see certain of our other factories ramping up pretty well, right? And they actually contributed pretty well to the margin for this quarter. In fact, one of the factories came pretty close to, in terms of per unit costs, to where we are for one of our other established factory, which is Fremont. So that was a positive in the quarter. And when it comes to energy margins, you know, Megapack deployment was the key driver there. And that product has done well. I mean, on the cost curve also, we've been able to do a lot there. But I do want to caution that, you know, Megapack deployments are a bit lumpy. So yes, we had a great quarter this period, but depending upon where we are trying to deploy that product in different markets, you would see periods wherein there would be downward pressure on deployment because of us trying to get the product to that place where
product in transit. Yeah.
Yes.
Yeah.
Okay, thank you very much. Let's go to Rod Lash from Wolf Research. Rod, feel free to unmute yourself.
Oh boy.
Thanks. Really nice to see the rate of vehicle cost improvement despite the downtime that you took. You've taken now about $2,000 out of the average vehicle cost over the past year. Can you give us maybe a sense of the rate of improvement that you see from the changes that you alluded to, the factory changes you alluded to, is there a way maybe to convey the speed of improvement on your existing product from here? And then related to that, can you share the timing of your next gen, the lower priced product that you talked about earlier this year?
Yeah, so just in terms of product margins, there are lots of puts and takes when you look into this. There are certain things which we control, and there are certain things which we don't control. We expect that we'll get some benefits from our cost reduction efforts, which are all underway. But on the other hand, we just finished our factory upgrades late in Q3. Some of these factories are still in the early ramp phase in Q4. We're still not up to where we want those factories to be, so they'll impact in the near term. Plus, like Elon mentioned, we're going to be ramping Cybertruck, which is going to be another headwind which we'll be dealing with. On top of all that, there's overall uncertainty in the macroeconomic environment, which even makes it harder to predict precisely as to where we land. But yes, this is something which, it's an evolving thing which we're observing every day and reacting to it on a daily basis.
I would just say that on the cost reduction efforts, like we are unflagging in our pursuit of additional cost downs for 2024. We do have a good pipeline of them in work on both the engineering side and the factory operations side. And, our intention is to maintain or exceed the trend that you saw. We're trying as hard as we possibly can.
The timing of the next gen product, can you share that?
Not at this time.
Okay. And just as a follow-up, obviously price is also a driver of demand, but that's obviously not happening in a vacuum. And you mentioned that, I think you mentioned it at some point during this call that you're also maybe hitting the law of large numbers on some of your products. Can you just share how you're thinking about price elasticity just at this point and in this macro environment? And any thoughts along those lines?
I think that there's very significant price elasticity.
No.
I mean, to be totally frank, if our car cost the same
We're
as
screwed.
a RAV4, nobody would buy a RAV4. Or at least they're very unlikely to. It's worth noting that a lot of these incentives, like the tax credit and whatnot, they're actually very difficult for the average person to access because most people do not have 10 grand, or even $7,500 burning a hole in their bank account. Large number of people are living paycheck to paycheck and with a lot of debt. They've got credit card debt, mortgage debt. So that's reality for most people. It's sometimes difficult for people who are high income earners, and I'd say high would be like someone who's earning over $200,000 a year, to understand what life is like for someone who is earning $50 or $60 or $70,000 a year, which is most people. So that for a lot of people, like these tax credits just they can't front $7,500 for 18 months or even 6 months to get for the tax credit, and they actually don't. In some cases, even have that. Then I have $7,500 in taxes. So, it's really just the vast majority of people is how much money do they have to pay immediately and how much per month. That's it. And you can stop right there. And a car is still much more expensive than a RAV4 when you look at it that way.
Yeah, one other thing which I'll add, when you look at, car buying in general, we're trying to get to the next set of EV adapters. And
not an EV adapter, just
next.
Who wants a great car?
Exactly.
It's not sometimes you get these honestly, I'd say it's somewhat correlates with the why doesn't everyone work from home crowd. I'm like, I mean, this is some real Marie Antoinette vibes from people that say, why does everyone work from home? What about all the people that have to come to the factory and fill the cars? What about all the people that have to go to the restaurant and make your food and deliver your food. It's like, what are you talking about? I mean, how detached from reality does the work from home crowd have to be? While they take advantage of all those who cannot work from home. So, I mean, you have to say, like, why did I sleep in the factory so many times? Because it mattered.
He's having a breakdown. Holy shit.
So I just can't emphasize how important cost is. It's not an optional thing for most people. It is a necessary thing. We have to make our cars more affordable so people can buy it. And I keep harping on this interest thing, but I mean, it just raises the cost of the car. I mean, we're looking at an internal analysis, which we think is more or less on track. That when you look at the cost or the price reductions we've made in, say, the Model Y, and you compare that to how much people's monthly payment has risen due to interest rates, the price of the Model Y is almost unchanged.
If you factor in the change in interest rates.
Yes, which is that's what I'm trying to say. The thing that matters is the monthly pay. It's how much money do they have to put down, and do they literally have that in their bank account, or will it check bounce? And then what is the monthly payment? And it doesn't matter if that monthly payment is principal, interest, or whatever. It's just a number, and that number has to not cause their bank account to go negative. That's it. So going from near zero interest rates to the current very high interest rates, the actual monthly payment is basically the same. It's just a bunch more of it is going to interest. And there are some incremental challenges beyond that, which is the difficulty of getting credit at all has increased. And so the number of people who simply cannot get credit, period. Even if they've got a job and everything's solid, the banks are, a little gun shy on handing out credit, given that a bunch of them kicked the bucket earlier this year.
Yeah, there's also just fewer options. Even if they want to hand out credit, there's fewer banks to go there.
It's like, does your bank still exist?
Yeah.
Well, if your bank does not exist, you have to establish a relationship with a new bank. So a lot of regional banks are, died, and I mean, even Credit Suisse. I mean, geez, that was a shocker. Got a 160-year-old-ish Swiss institution that doesn't exist anymore. That's mind-blowing. And I think there's still quite a few shoes to drop on the bad credit situation. Commercial real estate obviously is in terrible shape. Credit card debt has been rising significantly. The credit card interest rates are usurious. Over 20% interest rates, meaning which over time it becomes obviously extremely punishing. Because if somebody's paying 20% interest on their credit cards, it means they cannot pay them off. And if you cannot pay them off and you're still accruing interest at 20%, that's headed to a bad place.
Thank you. Let's go to the next question from George from Canaccord.
Thank you for taking my question. Just to focus on the cost per vehicle, coming down in future quarters, as you discussed in your written remarks. I'm curious as to what the levers of that could be. Is it more scale, more factory utilization? Is it material cost reductions? Is it things like gigacasting? I mean, could you just kind of give us some data points to give us confidence that that's going to come down over time? And if I can sneak one in, please. There are press reports, and I know how perilous it is to believe some of these, but they say that you've included radar as an option in some Model Ys in China, and I'm just here to ask if that's true, and if so, why? Thank you.
We've not included radar. We have radar as a Tesla designed radar as an experiment in the Model S and X. That's it. We'll see whether that experiment is worth it. But there are no plans to integrate radar into 3 and Y. Just as humans drive well, and in fact, an excellent human driver can drive with amazing safety simply with their eyes. The car will far exceed the average human safety just with vision, far. Because the car is looking in all directions at once, and we don't have eyes in the back of our head. So, the computer never gets tired, and never gets distracted, get drunk, hopefully. So radar is, it's not. What really matters is how much does it affect the probability of an accident, and in order for the radar to be effective, you have to be able to do radar only braking, or you have to do actions that are radar only. Otherwise, you get this disambiguation problem.
I just tweeted this.
That's why we actually turned off the radar in cars historically that we had shipped. All 3 and Y used to have radar, but we turned it off because the radar actually generated more noise than signal. Now, the Tesla designed radar is a high resolution radar that has some potential to be useful, but the jury is still very much out on whether that is in fact the case.
On the cost question, I guess from the vehicle side, as Drew mentioned earlier, we are always trying to engineer our products to be cheaper to make and more efficient to make. That comes obviously on the engineering side as we come up with new innovations, but as well on the supply chain side with our partners. We work with them to automate some of their lines, remove their bottlenecks and their high costs as well. On the logistics side, getting parts to the factory. It's not you go ahead. It's not like a one thing that you have to attack cost everywhere, and we do it ruthlessly at all times.
Operations efficiency, all of the above.
Yeah, I would say there's a whole laundry list of things which we are chasing. We internally call it the cost attack, where we're literally going line by line and saying, how can we make it better? And it's a grind.
The grind.
It's time.
It's
a game
of pennies. It's like Game of Thrones, but pennies. First approximation, if you've got a $40,000 car, and roughly 10,000 items in that car, that means each thing on average costs $4. So in order to get the cost down, say by 10%, you have to get 40 cents out of each part on average. It is a game of pennies.
We play it willingly.
We play it.
Yeah,
religiously.
We've done it many times. Even something as simple as like a sticker. There's too many stickers internally in the car that nobody ever sees. There's something as simple as a QR code. You might think, well, putting a QR code on part, why not just put them on there? It's like, well, are we actually going to use that QR code?
Costs a penny.
Bro.
Yeah, exactly. And
Move
then
on. Stop
inevitably,
talking.
sometimes the QR code doesn't go on properly, or you can't read it properly, and then it stops the line.
Costs more than a penny.
Yeah, absolutely.
So
it's chipping away with it. It is trying to. It does feel like digging a tunnel with a spoon at times.
Very much escaping prison.
Yeah.
On top of it, like we said, we did some factory upgrades, so we expect volume to go up. That would also bring some savings from higher production. But then on the flip side, we're going to be ramping a new product like Cybertruck, which we talked about. So those are the real puts and takes which we are working through.
Yeah, but there's not like some accidentally, some brick of gold that we got and left in the car, unfortunately. And it's, we're trying to be very rigorous about improving the quality and capability of the car, because it's like any fool can reduce the cost of a car by making it worse, and just deleting functionality and capability and
That's how I call this sort of the any fool. It's like if you want to like lose weight and you say, well, I need to lose whatever 15 pounds right away. Well, you could chop your arm off, but then you're sitting there with one arm, you know, and you're still fat. so it's sort of like, yeah, I gotta work at it. Yeah.
They have no management at this company. Manage the damn call. What the hell is this?
And doctor's advice. Yeah, it's not, super fun because food is delicious. And I personally am not I don't love working out. I know some people do. I wish I did, but I don't. Unless moving the mouse consists of working out, in which case I love moving the mouse.
All right, let's go to Colin Langham from Wells Fargo. Colin, can you unmute yourself?
Oh, sorry about that. Do you hear me now?
Yes.
Oh, great. Thanks for taking my question. You said in the commentary that you're not going full tilt on the plant in Mexico until there's signs that the economy is strong. Can you continue at a 50% CAGR without that plant? And where would that come from? And any color on what you mean sort of not going full tilt? Could that plant get delayed indefinitely? Or what are we kind of talking about?
No, we're definitely making the factory in Mexico. We feel very good about that. We put a lot of effort into looking at different locations, and we feel very good about that location. And we are going to build a factory there, and it's going to be great. The question is really just one of timing, and I'm just going to be a broken record on the interest front. It's just the interest rates have to come down. Like if interest rates keep rising, you just fundamentally reduce affordability. It is just the same as increasing the price of the car. So I just don't have visibility into. If you can tell me what the interest rates are, I can tell you when we should build the factory. We're going to build it, and I think we'll start the initial phases of construction next year. But I am still somewhat scarred by 2009 when General Motors and Chrysler went bankrupt. So, well, that's now 14 years ago. It's that is seared into my mind with a branding iron. Because Tesla was just hanging on by a thread during that entire time, and when we closed our financing round in 2008 at 6 p.m. December 24th, Christmas Eve, and if we had not closed that financing round, we would have bounced payroll 2 days after Christmas. So we actually closed that round on the last hour of the last day that it was possible. Stressful, to say the least, and then barely made it through 2009. So I'm like, I want to I don't want to be going at top speed into uncertainty. A lot of wars going on in the world, obviously, as well. And we have room here, like in Giga, Texas. You said we still have room in this building. It's not full with Cybertruck and Model Y, and there's plenty of growth opportunities still to have inside the building where our team already is. We also have 2,000 acres here. Yeah, so there's also a bunch more. We're actually only occupying a tiny corner of the land that we have. But we could technically do all the scaling necessary just here. Personnel is our biggest challenge in that the greater Austin area only has, generously, the greater Austin area only has 2 million people. So people are moving here and they're willing to move here, but there is somewhat of a housing crisis. They got to live somewhere. Yeah.
Okay,
yeah, so I don't know. I'm just curious. I'm not saying things will be bad. I'm just saying they might be, and I think Tesla is an incredibly capable ship, but it is. But if we need to make sure, like, if the macroeconomic conditions are stormy, even if the best ship is still going to have tough times, the weaker ships will sink. We're not going to sink, but even a great ship in a storm has challenges. Now that storm will apply to everyone, not just us, and not just the auto industry. It apply to everyone, I think. So apart from necessary sort of staples like food and stuff, but so I don't know. If interest rates start coming down, we will accelerate.
All right.
If anybody's got any guesses on this, I'd love to be less wrong. And I apologize if I'm perhaps more paranoid than I should be, because that might also be the case, because I have PTSD from 2009, big time. And in 2017 through 19 were not picnic either. That was very, very tough going. So, the auto industry is also somewhat cyclic. It's because, people tend to hesitate to buy a new car, and if there's uncertainty in the economy. So it's, car companies do very well in good economic times, and they don't do as well in tough economic times. So it's just, whereas if somebody's selling bread, then I think, that people still need to have bread. Yeah. Yeah, you need bread. You need food all the time. But new car, you don't have to have bread this minute.
Especially if there are wars going on, and then that impacts your sentiment.
Yeah. I mean, if people are reading about wars all over the world, buying a new car tends to not be front of mind.
All right. Unfortunately, that's all the time we have today. Thank you very much for all of your good questions, and we'll see you again in 3 months. Thank you very much.
What a disaster. What an SH9T show. I haven't seen an SH9T show this huge in a long time. I guess we should do a summary. I have one. All right. Oh boy. All right, here we go. Well, if there's anything to make you want to diversify from Tesla stock and invest in HouseHack, it was Elon the Bear on this earnings call. This was the least controlled and most disastrous earnings call I think I've ever heard from Tesla. Maybe because Zach isn't there to hold the reins in and actually monitor how this earnings call should go. The amount of nonsense and unnecessary commentary was fascinating, but also painful. At one point, Elon Musk almost breaking into tears about complaining about how work from homers are like Marie Antoinette's let them eat cake, and he's sleeping on the floor of the factory to make his company succeed. It's very weird how that belongs in an earnings call. But a lot of this, I think, has to do with something that Elon implied but didn't say. So let's start with the implication first. And I'll tell you what he said in a moment. But first, I want to ask you, when did this quarter end? It ended the end of September. Okay? Now, what I want you to do is look at the 10-year treasury. And I want you to go to September 30th. Well, there's no 30th because the month ended on 29th for like the business week. The 10-year treasury was 4.58%. It is currently 44 basis points higher. I think there's a chance, and this is not good, but I think there's a chance interest rates going up another nearly 0.5%, or almost the straw that broke Elon's back. Like, this is it. How many more times do we have to drop prices? Now rates go up even more. This is like peak fear Elon if there's ever peak fear Elon. Now he complains that, hey, maybe he's just excessively paranoid because of 08, but in 09. But if you look at the 10-year treasury chart, he's had peak pain on interest rates in literally the last 3 weeks leading up to this earnings call. And here we go. You've got Elon basically crying on the earnings call. But at least Lauren made me milk and cookies. Come say hi. No, come on, at least say hi. Hi. There, she exists. This is amazing. That makes up for a red day on Tesla anyway. All right, so what we got? Well, obviously the HouseHack does really good. HouseHack deadline on November 1st. So what do we have for Tesla though? So I saw a lot of people talking about how Elon seemed like he was intentionally complaining here. I think it's just a prelude to a really bad kind of potentially Q4 if rates stay this high. And the end of the year is supposed to be the good delivery. Now, they did reaffirm deliveries at 1.8 million, but they'll just cut prices even more if they have to make that happen. So Elon did, talk up about how, hey, we're at 500 million miles on FSD, wanted to lower the price of FSD to make it more affordable for people. No, bullshit. People weren't buying it. People aren't buying it, then you lower the price. Okay, it's simple. Talking about significant FSD progress, but unwinding some of his prior optimism, talking about how, hey, it was easy to make gains in the past. It was great. We were able to really crank gains in the past on FSD, but now it's slowing down. It's kind of that log curve where we're like, yay, big progress. Oh, now progress is going really slow. And that is true. They get to 95%, 0 to 95% is easier than getting from 95% to 100%. So I think that's creating some concern. Elon blatantly dodged how many Cybertrucks will be delivered this year. I think we'll be in like the tens or the dozens of Cybertrucks this year. Some people think it'll be hundreds. I think there's no way in hell. The event will be held on November 30th. I'm probably banned, but whatever. I probably shouldn't have tweeted a picture of Elon as a bear. I did do that. Okay, this is what he sounded like. Okay, he just sounded like a crying bear. So I wrote breaking. Leaked photo of Elon Musk on today's Tesla earnings call. Don't worry, everything is fine. All right? Yeah, right. You're super bearish today. Purposefully dodged the question. Just didn't answer the question about how many Cybertrucks they expect to be delivered this year. And I understand they probably don't know because they probably don't know that they're going to deliver more than like 10. And they don't want to say that in the earnings call because they've already said enough. A lot of optimism, obviously, about artificial intelligence, about how eventually the Optimus can build the Optimus. 10,000 GPUs in production, probably the fastest company to ever do this. This is so great for artificial intelligence, for NVIDIA. I think companies, especially as rates come down, are going to keep flooding money into Tesla. Into artificial intelligence, including Tesla. I actually didn't think the earnings were that bad. Just to give you a high-level overview of the actual earnings report and the spreadsheet in terms of a summary. Really, free cash flow of $848 million, better than I expected. Reducing the costs of the vehicle. A lot of talk about slashing pennies. I mean, they got down to talking about how the QR codes are too expensive to put on because sometimes they wrinkle up and then you can't basically laser scan them. And it's like, okay, but the tangents we went down were a little extreme, but they did provide color that, hey, look, they're trying to do everything to save every penny, right? There is good to see past this. Elon is not wrong to say that there is massive price elasticity in cars. That is correct. And remember, I've said this for a very long time. Tesla only has pricing power to the extent that it is a car. I believe Tesla has the most pricing power in cars. But cars in general are just a cyclical business. Interest rates up, as Elon says, affordability down. And he's not wrong. It's harder for people to get financing. These interest rates going up are a problem. They just went up even more. Q4 is probably going to be wrecked. That's not great. And Elon is so concerned about the state of the economy that they're like, you know what, we're going to kind of like put on hold Giga Mexico, and we'll do some of the long-term planning, like, the landscaping or this, that, or like not the landscaping, the land development, right? But what do we end up getting? Well, we'll probably just wait a little bit. In fact, we've got plenty of room at Giga Texas. Yeah, that's how the earnings call went today. Don't mind the new announcement in Texas or in Mexico. We got plenty of room in Texas. That should tell you a lot of how this call went. Okay. So yes, we had energy beats on revenues here for energy, but guess what? CFO comes in, the newest CFO, and says, hey, that was mostly mega packs, and that's going to be lumpy. So what does that tell you for Enphase? Oh no, not more pain. No. Maybe in terms of numbers. But remember, here's the thing, and I believe this. I think the stock market is going to say, as soon as we hit peak rates, that's an inflection point, and then cuts, that's an inflection point in the stock market. And the question is, did we bottom last year before all of this? Are we now in sort of like a lull, and do we, are we volatile until we actually get into rates where we hit some more lows? Entirely possible. Who knows? Crystal ball. Nobody knows. But so far, the economy's really been holding up. You look at it, it's like, sure, we've had some banking crises, but nothing the Fed couldn't print its way out of. But anyway, we've talked about that plenty of other times before. So let's focus here on Tesla. Tesla specifically suggesting that regarding the tax credit, some folks are actually, it'll be a benefit if some people can actually get the credit up front. And that'll help because people are looking at their cash outlay. How much money am I taking out of my pocket to actually get into a car? Supercharging stations up 24% annualized, slowing down from 30%. You also have a vehicle production annualized based on September's figures, sitting at about 516,000. But if we miss on Q4 deliveries, we'll have an even wider gap of inventory after Q4. Probably will sit there until until rates come down. Cybertruck production, Elon Musk thinks we can get to about 250,000 units of Cybertrucks produced sometime in 2025. That would be somewhere about 18 months to 30 months out, 2.5-ish years out. He thinks anything slower than about 18 months out after the delivery event would be disappointing, but it is possible. They do talk a lot about cost savings. They're really worried about the cost, probably because costs are not coming down anywhere near as fast as prices for the cars are coming down. That's compressing margin. That's not good. Margin compression, which again, feels like shrinking PP, but relative to all cars, that's true. That is true on all cars. The question is, of all the cars, which still has the best pricing power? Well, of course, it's Tesla. The question then is, okay, well, when do you buy? Do you just wait for a new low, which I don't think will happen, or do you buy and know you're going to be sitting in it, not sure when to time the bottom until we actually get rates coming down? That's the big thing here. So as far as some of the other commentary we got, talked about the Optimus being, having a kill switch. We've always talked about this as well, something that's hard programmed in. Talk about how FSD and the neural nets that the Optimus robots are being trained in is basically baby AGI, which for those CPAs here, that's not adjusted gross income. That stands for artificial general intelligence. That's basically what they're teaching. A lot of long run bullishness from Elon on artificial intelligence. But boy, the amount of bearishness that we got out of him, this is like peak Elon bear. You know what I think? Honestly, all right, this is going to sound mean, but you ready for this? Be really be like, Kevin, you're an asshole for saying that. Yeah. Cool. Ready for it? Elon needs to get his ass off of Twitter and Diablo. I said it. He's turning into a bear because of Twitter and Diablo. Just saying. I don't know. Think they could have ran that earnings call a lot better. And I think Twitter is making him extremely bearish. The fact that Elon is sitting there basically quoting the bear arguments. Oh, credit card debt's at all-time highs. Well, no shit it is. Did you try inflation adjusting it? No, of course not. Oh, national debt's going up. I know. Do we need more bear arguments? We already know. We're here at the Tesla earnings call. Not a lesson in macroeconomics. Well, it's interesting. He's not wrong. Things get a lot more expensive when interest rates are higher. But, I'm a big fan of just calling it like it is. And if I'm coming to the Tesla earnings call, you could talk your macro stuff and your woke stuff or anti-woke stuff wherever you want. But I don't think the Tesla earnings call is the place. If I were a Tesla board member, I'd be like, what the hell are you doing, dude? Why are you dodging the SEC and basically crying on the earnings call? Like, put some pants on and run it as a professional call. And I know some people like Kevin, you're the one who makes pee-pee jokes all the time. Yeah, what's wrong with that? I like big pee-pee, okay? I really like big, juicy pricing power stocks. I like that, okay? I don't think there's anything wrong with that. But I'm also not in a professional earnings call with Wall Street analysts. It's a different setting. It's a YouTube channel. If you don't like it, don't watch it. But this is like a slap in the face to the investors, the way these earnings calls are managed. Like Zach at least had his shit together. Anyway, Elon talks about large price elasticity again. That's true for all cars. We'll give him some defense here. That is true for all cars. Obviously, he compares himself to like a RAV4, and it's like, why would anybody buy a RAV4 if you could buy a Tesla? Well, maybe because of your tweeting, people will buy the RAV4, which is exactly what somebody who shall remain unnamed in my family did. They're like, I will pay more for a RAV4 not to support that guy. Sorry, bro. Maybe if you had somebody actually telling you the truth, you'd stop. No. Anyway, then he's complaining about, oh my God, I can't believe Credit Suisse went away. And the credit situation is getting worse. Commercial real estate's doomed. And I think there are quite a few more shoes to drop. Those were quotes from him. His words, not mine. And I get it. I get it. It went through 2009 and it was an SH9T storm. I get it. But bro, we're here for the Tesla earnings call. Not the what you read on Twitter theory of what's going on in macro. J-Pow speaks tomorrow. Maybe he could wipe Elon's butt or change Elon's diaper or something. I don't know. Talks about enormous challenges and reaching volume, really tempering expectations for the Cybertruck, really making sure that people realize the Cybertruck is a brand new system for designing a car, creating a whole new car with an exoskeleton that's a lot harder to manufacture. Probably not going to be cash flow positive for about 18 months, he warns, which in Elon time probably means like 2.5 years. He does think it'll be the best product ever, and I don't disagree. Like, don't get me wrong. I can bitch about Elon all day long, and I do. But I love Tesla. I love the people at Tesla. As interest rates rotate down and markets start recognizing that treasuries have bottomed, I think Tesla's going to do exceptionally well. I put my money where my mouth is. I'm invested in Tesla, Enphase, NVIDIA. I strongly believe it. That doesn't mean I can guarantee it. In fact, I have a little laminated disclaimer here. Keep in mind that even though I'm a licensed financial advisor, licensed real estate broker, and becoming a licensed stockbroker, this video is not personalized financial or real estate advice for you. This video is generalized perspective. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. And if you want to invest in HouseHack, you go to househack.com because the deadline is November 1st. By far, when we survey people, there are two big reasons. They're like, if anybody could do it, they're like, I want to bet on Kevin for the real estate startup. Or the second reason is they want to diversify. Those are the two big reasons we're getting for people for HouseHack. This is just some things that we're hearing in surveys. You know, no guarantees. Obviously, investing in startups is risky. Read about it at househack.com and read the circular there. This is not a solicitation. Anyway, talks about tempering Cybertruck expectations. It's difficult to make cars like this. Dodged the question on how many deliveries they would have. He literally says, we basically dug our own grave on the Cybertruck and nobody digs their own grave better than themselves. The next generation vehicle will be a lot easier to produce, like the smaller two-door version of a Tesla, the Model 2, because there won't be large hot stamping, new high voltage architectures. It'll be much simpler and easier to ramp faster. 4680s, working on increasing it. I really think the 10-year treasury spike just killed orders in October. Like, I think orders hit a wall in October. I'm not sure about that, but to me, orders hit a freaking wall. That's what he's implying. It's not good. Not good. Then he also walked back on the 50% CAGR target, even though in their earnings presentation, they literally have written, we're still targeting 50% year-over-year growth. Elon's like, well, you know, law of large numbers. That's going to get harder. Well, duh. I mean, I've been targeting for about the last year and a half, like 30% growth for Tesla. But it still kind of is interesting to see Elon walk that one back. He does say there is something to be gained from advertising. Thank you, Elon. Thank you very much. He says that the problem, though, is if you're showing people things they can't afford, it doesn't help them much. So once again, he's complaining about interest rates. I don't know if I fully agree with that because I don't think people realize how inexpensive the Tesla has gotten. But then again, nobody's telling it like it is to Elon. And I know Elon, he'd probably be like, whoa, what do you know? You got on YouTube or whatever. It's fine, man. Whatever, dude. There are millions of people who have no fracking clue that the damn car can basically drive itself 95% of the time. They don't know how safe it is. They don't know how good it is. They don't know what the range is. They don't know anything about it. There are millions of people like that who are perfectly capable of affording the Tesla. I mean, I don't know where you're advertising, Elon. Maybe you're advertising in, somewhere where the demographics aren't that ideal. I don't know. He needs a manager. Poor guy. Anyway, too stressful. I don't know, man. Optimus. Okay, we talked about that. Significant cost declines. R&D will keep going up. Yeah, R&D blew up like 24% quarter over quarter. That's like doubling on an annualized rate. A lot of negativity from this earnings call. Tesla currently trading at about a 2.5 PEG ratio with 28% growth projected by the street. I'm at about 30%. A lot of negativity. All I can say is I hope J-Pow is watching. And I don't know. But I'm going to keep eating this cookie now. And we'll keep the Dragon Dagger poison tip away from Elon because I don't know. He's not stable right now. Poor guy. I really feel bad for him. But he probably hates me. And that's okay. Like I'm just going to give my opinion. I'm tired of people like actually affecting my mood. Like I used to care. People would be like, "Kevin, I can't believe you said this." Now people say that, I go, "Oh, maybe they have a point, Okay, maybe they have a point." But most of the time it's like, yeah, I don't care. It's like I'll read the comments as I'm curious about the perspective, but somebody's like, "I disagree with you. You're a douchebag." It's like, okay. But at least the perspective is out there. Because if you just say what everybody loves, what's the point of watching? You got to have some realism. You got to have the balls to say what you think. Be a little bitch.